You ready? Do you know the lights? I will turn them on as soon as you let me know. Yes. I was taught this morning.
Okay. I see the light screen, but I don't hear anything.
There you go, sir.
Okay. Good morning, ladies and gentlemen, and welcome to the Peace River Manasota Regional Water Supply Authority Board of Directors meeting for April 3rd, 2024. Let the record show all commissioners are present. If we please rise for invocation by Commissioner Beard, followed by the Pledge of Allegiance.
Please bow your heads. Father, thank you, Lord, for another beautiful day that you've given us. Lord, as I was driving here, you constantly remind me of the beauty that these counties that you have put us over. And I just thank you for that, Lord. I thank you for the opportunities just to serve you. And Lord, we just constantly ask for wisdom, direction, and grace upon grace. And Lord, all good things come from you. And we give you all the honor and glory. In Jesus' name, amen.
Amen.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
I'd like to welcome all our guests today, and if there are any post-county remarks from Commissioner Gross.
No, just glad to be a part here. Commissioner Langford had to be out today, so I'm thankful to be able to serve on board. And this is a critical part of our system, and just glad to be here.
Thank you, sir. We'll open it up for public comments. Any individual wishing to address the board on an item on the consent agenda or regular agenda, or an issue that does not appear on the agenda, should complete a request to speak card and submit it to the authority's recording clerk prior to public comments. Each person that submits a card will have 3 minutes to address the board. 15 minutes is provided for this public comment item unless additional time is needed for individuals to address the board on voting agenda items. Is there anybody from the public wishing to speak? Do we have any cards? Okay, I don't have any cards, so we will move on. Next on the agenda is the award recognitions. Richard Anderson.
Thank you, Mr. Chair. Richard Anderson, Authority staff. Before I start, I'd like to call a couple of folks up here. You guys know who you are. Chris, Doug, and Jimmy. If you come up here, please. Thank you for giving me a couple of minutes to present this item. Each year, Florida Department of Environmental Protection gives awards of excellence to utilities based on their size. So the authority's plant is a Class A large plant. And I'm pleased to announce that last week we received, on your behalf, the 2023 Award of Excellence from the DEP for outstanding operations in the water treatment plant for regulatory compliance, maintenance, and operations. And we just wanted to shamelessly take a plug for ourselves and present the award to you, and we'll display it proudly at the water plant. I do wish DEP would open up their budget a little bit for funding on awards, because hopefully they're not here today.
There goes the next grant.
There it goes, more awards for us. But I just wanted to introduce a couple of guys that make it happen every day at the plant. I didn't win this award, these guys did. And start with Chris Rogers. He's one of our project managers. He's done a lot of the R&R projects at the plant to keep it looking great. He's upgraded Plant 3. He's working on upgrading Plant 4. Doug Leith is our maintenance manager. He's been here 30 plus years. He's the brains of the operation. He knows everything. Where all the bodies are buried at the plant, he knows everything about the plant. So, Doug Morton is our lab manager, keeping us in compliance. And then Jimmy Dixon's the newest addition. He came in and replaced Mike Chell, if you remember him. He's our operations supervisor. And he put the award together and actually submitted it for us and was successful in getting it approved. So thank you guys for the hard work, and just wanted to recognize you for a minute. Thank you.
Okay, next on the agenda, we have the consent agenda. Are there any items any of our members would like to pull? I'd like a motion to move the consent.
So moved, Mr. Chair.
We have a motion and a second to move the consent agenda item. Is there any objections to the motion? Hearing none, passes unanimously. Okay, we'll move on to the regular agenda. First item is the water supply conditions report. Richard Anderson.
Back again, Richard Anderson, member of your staff. The water supply conditions report, as usual, is an information item. We're covering the water supply conditions in the Peace River Basin, and then we take a look at your demands. In this case, will be for the month of February. We usually first off take a look at rainfall. As I've mentioned in the past meetings, we've had a great winter. We've had a wet winter, and we've been able to keep the withdrawals going on the river and keep the reservoir full, as you'll see in a minute. All told, between December and March, we've had 9 inches of rain in the basin, which typically that time of year we're averaging about 4 inches of rain. So we've had quite a bit of rain, and it's been very beneficial to keeping the supply side full. Here's a look at the river flows. As you can see, the green bar represents the actual flow on a monthly basis in the river. And anytime we're above the red line, which is our minimum withdrawal point, we can take water from the river. So as you can see, we've been able to take water all winter. And in fact, even today, we have about 15 million gallons that we can harvest today in April, which is typically one of our driest months, and we almost never have water available to draw during April. So again, in really good shape from the supply side going into the driest times, April, May, and June. So here's a look at the river withdrawals. As I said, we've been keeping everything topped off, so we're basically operating in maintenance mode. We filled up back in October, November, and basically since December we've been taking just enough to meet demands, keep the reservoir full, and keep everything topped off as far as the reservoir 2 goes. Well, here's a look at storage. As I said, we're completely full as of today. We have about 6.55 billion gallons in surface water storage. That's just below the permitted allowed amount. As you can see, the yellow or the blue dotted line is the permitted quantity, and the red is our actual level of storage. The ASR system has been in storage mode basically most of the season, obviously, because we're completely full in the surface water. We haven't had to use any of the ASR, so we currently have about 8.9 billion gallons in the surface water system, and we typically say we can yield about 50 to 60% of that. So of that 8.9, we have about 5 billion gallons of usable product in the ASR system. And when you add up the surface water supply and the ASR, you can see this is our total days of available storage or available supply. The red is our contractual quantity of 34.7. So if we delivered 34.7, we could deliver it for 341 days. Right now, our average is about 30.5 to 31 MGD. So at that rate, we could deliver for almost 400 days, 395 days of supply on hand. And now we'll take a look at the demands for the month of February. The authority delivered about 28.6 million gallons a day for February, and your county and city facilities delivered about 56 million gallons per day. All told, about 84.5 million gallons. Of that, 3.5 MGD went to non-authority customers supplied by Manatee County. So the total authority use was about 81 million gallons a day. Charlotte County from the authority used about 12.6 million gallons a day. You supplied about 0.9 MGD from your Burnt Store facility, so your total usage was about 13.5 million gallons a day. And as you can see by the red bar, which is the 12-month running average, you're slightly higher than you were last year for your usage. Last year you were at 12.98. You're now at 13.3. So on the 12-month running average, you're still increasing your demands. DeSoto County, for the month of February, used 1.2 million gallons from the authority and about 0.3 from the self-supply over at the correctional facility. Total usage was about 1.5 million gallons a day. As you can see, their usage is up quite a bit. They've been supplying water to the city of Arcadia for about 6 or 8 months now. I'm not sure of the situation, but they do need the water. The city needs the water, so the county's been supplying it, and they've worked out an agreement to supply that water until they can get back on their feet. So their usage is up about 0.5 MGD more than normal right now. In Manatee County, Manatee County delivered about 39 million gallons a day to their system, their customers. They exported another about 3.8 million to Sarasota County, and then again about 3.5 million to the consecutive customers they serve on the coast. Total production for Manatee was 46.2, and again their usage is creeping up as well. The 12-month rating average is just over 40 million gallons a day. In Sarasota County used 13.7 million gallons from the authority, self-produced about 4 MGD, 3.87, and they imported 3.87 and they self-produced about 6.6 million gallons a day. Total usage was 24.15, and as you can see, like everyone, their demands are increasing over last year, although a little bit less than most, 2403 versus 24.19. And finally, City of Northport. Northport purchased 1.09 from the authority. They self-produced about 2.8 MGD for a total of 3.87 for the month. And their usage is, again, creeping up just a little bit there from 3.46 last year to 3.60 for today. And when you combine all those numbers up and take a look at the regional picture, you can see we're up from last year's 85.0 number to 86.3, 86.4. So in the last 12 months, demands have gone up in the region about 1.3 MGD. And look at utilization. This is what we pump versus what we're permitted to pump or deliver, which is 104.7 million gallons a day. For the month of February, we delivered 84.5 to the region, and that includes the customers, the coastal customers of Manatee County. That leaves about 20.2 million gallons available for use, and that's about 81% utilization for the region. So with that, I'd be happy to answer any questions you may have.
Any member comments, questions? Thank you for the presentation, sir.
Thank you.
Yep, we'll move on to regular agenda item number 2, our legislative update. Katie Kelly.
Good morning. My name is Katie Kelly. I think this is my first time presenting in front of all of you, including my own boss. I am a government affairs specialist with Manson, Fulvis, Donaldson, Tanner. I'll be presenting for you an overview of the 2024 legislative session, highlighting the FY 2024 and 25 budget and legislation that may be of interest to the authority. On this slide, you can see that 1,957 bills were filed, which is slightly less than there was in the previous session. Of that number, 325 bills passed the legislature, which doesn't seem like a whole lot, but it's been pretty standard with what years have done in the past. For the authority, we tracked nearly 100 bills. Here you can see it's exactly 103. As of yesterday, when I turned this slide in, 45 bills had been approved and 2 had been vetoed. The governor got a slew of bills yesterday, of which he signed 11, bumping that number up to, if I do my math right, 56. And he has about 32 bills that are still waiting for action. And I think there are also, whatever the math is, whatever remains is still enrolled that will be sent to him at some point. On March 8th, the legislature approved a $117.4 billion budget, which is roughly $3 billion more than the prior year funding. A highlight for the focus on Florida's future budget includes $10 billion in reserves, which you can see here, which contain $5.1 billion in general revenue, $4.4 billion for the budget stabilization fund, which is essentially our savings account or our rainy day fund. $500 million for emergency preparedness and response fund, and $500 million to retire outstanding state debt. Additionally, this session's budget includes nearly $1.5 billion in tax relief, which was something that the governor has pushed significantly, and I know that probably impacts areas down here more than my area. In toll saving, with $450 million in toll savings. Over the course of the last 2 years, Floridians have enjoyed $4.2 billion in tax savings with nearly $1 billion in toll savings, which I believe last week, or maybe it was earlier this week, the governor was in Miami highlighting these successes. This year's budget also includes $14.6 billion of surplus before any action from the governor, and does not include the additional $200 million collected over the most recent revenue estimates for the month of February. So overall, Florida has a very healthy budget. Since Governor DeSantis took office, Florida has paid down $5.3 billion in state debt, and as mentioned above and outlined on this slide, this year's budget secures another $500 million towards accelerating the debt paydown. As of today, the budget has not been submitted to the governor for consideration. However, his office is going through the consideration for the veto process and approval process because he does have line item budget authority. However, his Chief Budget Officer, Chris Spencer, was recently appointed by the cabinet last week to be the executive director of the State Board of Administration, or otherwise known as the SBA. And so with that, he will start early May or mid-May, and that means the budget will be signed or vetoed, prior to Chris's departure. Gives you a little bit of a timeline. For environmental highlights, the legislature approved an environmental total budget of $9.9 billion. This includes such agencies as Florida Department of Environmental Protection, Department of Agriculture, Department of Citrus, and FWC. Include $1.7 billion for water quality improvements, which underneath those I have listed water supply grant program, water projects, alternative water supply, and spring restoration. $125 million for flood and sea level rise programs, $528.6 million for Florida Forever and other land acquisition programs, and $178.3 million for water infrastructure improvements. For the 2024 legislative session, the authority submitted 2 appropriations projects for funding consideration. The first was the surface water expansion project, which was sponsored by Senate Majority Leader Ben Albritton, which I'm sure many of you in this room are very familiar with, and House Majority Leader Mike Grant, another familiar face. This request was for $10 million to provide the withdrawal, storage, conveyance, and treatment facilities necessary to meet regional drinking water needs through 2040. Unfortunately, this request was not included in any iteration of the legislative budget. Additionally, the authority submitted a $5 million request for the regional transmission expansion system. This request was sponsored by Senator Jim Boyd and Representative James Buchanan, you can see here on this slide, and was funded for $2.5 million. Up next, I'm going to go over a handful of bills that may be of interest to the authority. Overall, this session, there really wasn't a ton of bills passed that would have a direct impact on the authority, so going through the bills, I thought maybe some of these would benefit you guys. It's just a recap. The first one is House Bill 149 by Representative Danny Alvarez out of the Tampa area. This bill addresses issues with the Consultant Competitive Negotiation Act, or CCNA. Current law for CCNA authorizes the use of continuing contract for construction projects as long as each project does not exceed $4 million. This bill will increase the maximum limit for continuing contracts covered by the CCNA from $4 million to $7.5 million, plus an annual increase based on CPI. Beginning July 1st, 2025, the bill requires the Department of Management Services to annually adjust and publish the annual change to the individual project maximum cost based on the June to June CPI. So I think that's a big win, as you guys probably do a lot of construction projects. Next is House Bill 275, offenses involving critical infrastructure by Representative Kennedy. She's out of the Polk area. This bill creates new statute relating to offenses involving critical infrastructure. The bill creates new second and third degree felony offenses and provides for civil remedies if a person is found to have improperly tampered with the critical infrastructure. It also defines critical infrastructure to mean any linear asset or specified entities for which the owner or operator thereof has employed measures designed to exclude unauthorized persons. So basically any kind of trespassing issues you may have. Next is Senate Bill 1532, related to mitigation by Senator Broder, who I'm sure many of you know. His father used to be an employee at Peace River back in the day. He's very proud of that. He also is a big participant in our barbecues and other outreach that we have. This bill expands the water quality enhancement credit program to allow private entities to purchase credits. Specifically, the bill provides that water quality enhancement credits may be sold to governmental entities seeking to meet an assigned Basin Management Action Plan or BMAP allocation or reasonable assurance plan to provide or to private or governmental applicants for the purpose of achieving net improvement or meeting environmental resource permit standards. The big environmental bill, I guess, that we could say for this session was House Bill 1557. This was DEP's legislative package for the year, which I know it seems to have been born of a lot of the impacts from the prior Senate Bill 712 a few years ago. In addition to other provisions, the bill specifically does the following as far as reclaimed water is concerned. It directs water management districts and DEP to develop rules to promote reclaimed water and encourage potable water offsets. Authorizes extended permits for the applicants or permittees that propose a development or water resource development project using reclaimed water. Secondly, the bill establishes the following for the Resilient Florida Grant Program. Authorizes DEP to provide grants to counties or municipalities to fund an update of their inventory of critical assets, including those that are currently or reasonably expected to be impacted by flood or sea level rise, the development of strategies to enhance community preparations from threats from flooding and sea level rise, and permitting for projects designed to achieve reductions in the risk of impacts from flooding or sea level rise. Regarding the statewide flooding and sea level rise resiliency plan, the bill authorizes the plan to include projects not yet identified in comprehensive statewide flood vulnerability and sea level rise assessments, expands the type of projects that can be submitted by local government or regional entities, and requires DEP to include projects funded under the Water Quality Grant Program on a user-friendly website or dashboard, which transparency is. For Senate Bill 1638, this is funding for environmental resource management by Senator Travis Hudson, and I believe Representative James Buchanan also had this bill in the House. I never thought that the gaming compact and the environment would merge, but here they do. This provides that 96% of the revenues from the 2021 gaming compact between the Seminole Tribe of Florida and the state of Florida be deposited into the Indian Gaming Revenue Trust Fund through the DFS, the Department of Financial Services, to acquire and manage conservation lands and make significant resiliency efforts. So this money that will exist, it's kind of been divided into three buckets. The first bucket is the lesser of 26% or $100 million to the Florida Wildlife Corridor, which you guys probably know that was President Pasadomo's big initiative the last couple of years. Bucket 2 is the same amount, but it will be for the management of uplands and removal of invasive species. Of that bucket, the 36% or $36 million will go to DEP for state park land management activities, $4 million for the implementation of the local trail management grant program, $32 million for DACs for land management activities, $32 million to FWC for the same thing, and another bucket for 26% or $100 million to DEP for the Florida Resilient Trust Fund. This bill, once it is signed by the governor, which has not been sent over, will become effective immediately. I promise I'm almost done. The next bill I have on the slide is House Bill 713 as it relates to special districts. In addition to other provisions, this bill as it relates to the authority would require each special district to establish goals and objectives for each program and activity undertaken by the district. To determine if the district's goals and objectives are being achieved by October 1st, 2024. It will also require each special district to prepare an annual report by December 1st of each year describing those goals and objectives. I know this is something that the state does with several other state agencies. I know when I was at Water Management District, that was something we practiced. So I assume they're applying it to the special districts as well. Last but not least is Senate Bill 7040, which is the ratification for the stormwater rules coming out of DEP. The rules were developed to increase removal of nutrients from stormwater to protect the state's waterways. The SERP, or the Statement of Estimated Regulatory Costs, which I believe trips over $1 million and then it has to go to the legislature for ratification, ended up at $1.21 billion, which caused the need for the ratification. This mandates future amendments to specified sections of the rule, implements changes outlining the requirements for stormwater management systems, creates exemptions, establishes a framework for stormwater treatment systems, requires operation and maintenance of all entities, and exempts stormwater management designs approved before January 1st, 2024. This one is another one, if it's approved by the governor, it will go into law immediately. Up next, we have our Swift Mud or Southwest Florida Water Management District Board confirmations. Here I have them listed out. As their terms expire, or in the case of Brian Armstrong, he serves at the pleasure of the governor, so every new gubernatorial term that he's appointed, he has to go through this process. So that's why Brian is on there. He serves at the pleasure of the board. Ashley Barnett, Kelly Rice, and Joel Schleicher, they've been existing board members for quite a long time now. Their terms end March 1st, 2027, with Nancy Watkins. I believe she replaced someone, which gives her confirmation term through March 2025, so she'll have to go through that process again. Looking ahead, I know it'll be here before we know it. I think I saw somewhere the other day it was like 226 days until the general election, which will be here, very quickly. So the primary election, for everybody, just as a reminder, August 20th, 2024. General election, November 5th, 2024. And sometime between the general election and Thanksgiving, there will be a legislative organizational session by which all of the legislators that were selected in the 2024 cycle will be sworn in. And at that point, we'll learn more about committee assignments, et cetera, and kind of who's in leadership and that, additional information. And then committee weeks will start January 2025 and February 2025, with sessions starting March through May next year. You guys are very familiar with Doug and now myself, and I'm sure Laura Donaldson as well. We service you guys in Tallahassee as well as in the area. If you guys have any questions, I'm happy to take them at this time. If not, it was a pleasure presenting to you, and I look forward to seeing you guys soon.
Any member questions or comments? Thank you for the presentation.
Thank you.
Thank you. We will now move on to regular agenda item number 3, which is the authority insurance coverage review and property insurance renewal. And we have Ann Lee from Finance and Budget.
Good morning, Commissioners. Ann Lee, Authority staff. We'd just like to briefly introduce Michelle Martin with Brown & Brown. She's been the Authority's long-term insurance partner. She'll be reviewing our current insurance coverages and providing recommendations for the property insurance renewal.
Good morning, and thank you, Ann. I hope I can make this just as exciting as a legislative update.
It's going to be a hard act to follow.
I have a problem with the insurance.
Again, I'm Michelle Martin with Brown & Brown Public Sector, and I've worked with the authority for several years now. I thought a brief agenda, wanting to go through all of the authority's current insurance coverages, talk about specifically the property market conditions and what we've been through the last year or so, go through the options that we've developed for the authority, and then do some comparisons and present the recommendation. So there's some additional backup in your packet as well, so if you have any questions on anything that's in there, This is more of a high-level overview. So our current coverage is, and has been for over a decade, with a company called StarTech. And they insure only large manufacturing and utility operations. They're an international company, and they've been a very good partner to the authority for many, many years now. We had a little hiccup with them last year. We had a hurricane loss from Hurricane Ian, and the market conditions were just absolutely horrible last year for everyone involved. So our current coverage, though, is a $25 million, what we call loss limit. We are insuring about $143 million of hard assets for the authority. And the deductibles went up quite a bit last year, $100,000 for things like a fire, and then 5% of that $143 million of assets, which is about a $7 million minimum deductible in any kind of named windstorm, including hurricane. We also had a reduction in coverage from what we call blanket coverage to stated value, which are the values that are stated on the schedule that we submit to the underwriters. And that is also in your packet if you want to look at the detail on that. We like to have broader coverage than stated value, just in case we, make a mistake or things change, as they have with the inflation that we've been dealing with the last couple of years. Regardless, our expiring premium for the property is $726,500, and that increased quite a bit last year as well. I'll get into a little bit more detail on that in a minute. The property insurance does renew on April 30th, and so we do need to get your approval to renew our recommended coverage. The remaining coverages are effective on October 1st, which is your fiscal year. We have you currently in a special, what we call package or liability program. It's with a company called Glatfelder Group. The insurance company is National Union Fire. It's an AIG company. So all of the companies that we're going to talk about are going to be A-rated by AM Best or better. And so with the Glatfelder Group, again, it's a special water authority program, so it's got some nice coverage extensions. I don't want to spend a whole lot of time on that today, but we have up to $4 million for each occurrence for a general liability, which would include things like bodily injury and property damage to third parties. Automobile liability works very similarly to your personal insurance, so any kind of liability associated with your operation and vehicles, as well as physical damage coverage. If you damage your vehicles, we have coverage for that. There is public officials, employment practices, liability, which we consider more of a professional liability. Those coverages extend not only to the elected officials, but also to staff and those acting on the authority's behalf. We have, now a couple years ago, you may remember, the state of Florida passed a law with some privacy around cyber liability information for public entities. And so I haven't placed information about your cyber liability coverage on these slides. We'd be glad to provide that information to you or have a discussion with you about that. But within your package policy, we have $1 million limited limit for certain cyber liability related exposures. And then you'll see in just a minute, we have an additional coverage for an additional $2 million. So we believe, staff and I have worked on that, and we believe we're adequately covered for your cyber liability as well.
I have a quick question.
Yes.
On the statement of values, I think it was Appendix D.
Yes.
Who determined on behalf of the authority the valuation of each facility, each building?
So those are historical. The last few years we have been getting, and I hope I get this acronym, ENC?
The Commissioner, to say to answer your question, like Michelle was saying, the statement of values has been with the authority policy since before I came to join this group, and what we've done over the last couple of years is we've indexed it using the Engineering News Record CCI rate, just to keep it up. Please note that we actually have $263 million of net assets of the authority, so we're only ensuring a small portion of them to take on some of the risk on our side and save some money too.
Okay, because since we have an asset schedule now, how we determine the valuation is important, because if we've underestimated, it's coming out of the authority's pocket. So I was wondering how you came up with the schedule, if you had a third party look at the assets. You're telling me you're just using an index based on historical values and just indexing it.
That is what we've been doing over the last couple of years. I believe my predecessor did have some sort of appraisal done at some point in the
That's what I was wondering, if we
facility.
had a professional.
But I can't tell you what that date was or who the appraiser was. I don't have that information, but I can look for it for you.
Yeah, I mean, I would trust the index is keeping up with everything, but what most people are finding out when something goes bad, you don't have the cost to complete or bring it back to the way it was, whatever the costs are of that time period. So while we have a schedule here, we could be undervalued by millions and millions of dollars that we don't know.
Yes, sir, that's right. It's very important to look at replacement cost versus actual cash value.
So I would probably feel more comfortable if we did get to a place where we can really confirm what those assets, the value is, other than looking at historical value and then throwing an index on it, which may or may not, be a true reflection of replacement costs.
Your comment is very timely, because I was actually just made some phone calls last week to find an appraiser that could actually appraise our facility. So we are in the process of working on that, and we'll make sure we get that to you.
Thank you.
Thank you, and I really appreciate your comments also, because it is definitely something that needs to be addressed by all of us in the state of Florida because of the inflation, and particularly here in Southwest Florida after Hurricane Ian, we definitely have what I call a demand surge, and so the cost of labor and materials, because we're still in the recovery process from Ian, is actually higher as well. I think I saw an estimate that over the past 10 years, costs for building have gone up 30 to 40%.
Well,
So it's significant.
what's fresh in my mind is in Charlotte County, we had a budget for wastewater facility improvement. It was around $56 million. The low bid came in at $106 million, and the next bid was like $113 million. So, when I look at these facilities, they're specialty facilities, and only few people can put it back together. So, when I'm looking at our facility schedule, a lot of those facilities are specialty items that, we don't know until we actually get an appraisal and an engineer's estimate of cost, so to speak. See, what are the real costs? Because if we have a facility valued at $20 million and we go to fix it, and guess what? It's $50 million. Well, where's the $30 million coming from if we have a cap? We're gonna have to come up with ways to pay for things. So that's my concern.
Absolutely. And we have had an on-site appraisal done in the past, and the staff has been really good about keeping trends up. And in the past, we had this blanket coverage, and so this blanket coverage, if you
can shift money around.
Exactly.
Yeah,
you can
that's
shift
what I'm
the
saying.
money
Now that we
around,
have a
so-
schedule, we can't do that.
Yeah. Well, right now we can't, but effective 4/30 we can if
Okay.
you take my recommendation.
Okay.
So we did fix that because I do not like that stated value coverage, and a lot of entities got that because of what my industry calls loss creep. They found, particularly after Hurricane Ian, that there was $1 million building on the schedule and was actually costing $3 million to rebuild it, and so the insurance industry has been pushing for these valuation increases as well. So that will only help me when I'm out in the marketplace as well. So again, thank you very much for supporting that. So we have a separate what we call a crime policy. that basically covers you for theft or criminal acts that access your monies and securities. So it's not necessarily for, you know, your structural assets, but for your monies and securities. We do have workers' compensation that is required by Florida law. That is with for governmental insurance trusts, and we'll talk about them in just a minute. We have a premises pollution cover, which covers for third-party allegations, defense costs, and remediation of defined pollutant events. And then, as I mentioned, we have another cyber coverage for another $2 million with a consortium called Cowbell, and it's comprised of 4 different insurers, but also has very broad coverage. And I'm going to move along to the property unless anybody has any questions about the rest of the insurance program.
Any member comments, questions? Okay, we'll keep it rolling.
All right. So again, I think you know, last year was extremely painful for all of us, including myself. So you know, one thing I do want to mention is we brought StarTech in to help with the builder's risk insurance when you all did the expansion of Reservoir Number 2. And they were very, very helpful, and they've been very, very helpful. Their premiums and their coverage have been what we call below market for many, many years. Last year, with all the craziness, they really gave us a very difficult renewal. We had to take 80% increase. They reduced our limit from 60 million to 25 million, which, again, to your point, that was very concerning as far as, hey, are we valued properly? And, you know, could we have a loss over 25 million? Absolutely, because there are options out there. We have looked at those options in the excess and surplus lines market, and the consensus of myself and staff is we would really prefer to have a higher limit than that 25 million based on the amount of assets that we have. And then our deductible went up to a $7.3 million minimum, which I remember being at this meeting last year for approval, and that was probably the most painful point for all of us, is that deductible was so high. Our total claim for Hurricane Ian was well below 7.3 million. So hopefully, again, that's worst case scenario. If it's ever going to happen to us ever again, is what happened at Hurricane Ian. So that deductible was really not palatable. And then they took us from blanket valuation to stated value. So again, some terms and conditions that are on our current program that we're not a fan of. Now, the great thing that happened, I'm probably not going to spend a whole lot of time because these slides explain why what happened last year. I think, again, with all of us being in Southwest Florida, we're very well aware of kind of what happened with the property insurance marketplace following Ian. But it actually started in 2017 after what I fondly refer to, or unfondly refer to as HIM, which was Harvey, Irma, and Maria. And that was really devastating to the industry. We had enjoyed a period of over 10 years where rates were stable, and many years we were bringing increases and improved terms and conditions to the authority and everybody else. But after HIM in 2017, all that changed, rates started going up, terms and conditions started going up. And, we try to keep, premiums, in particular terms and conditions, as stable as possible for public entities because of your budgeting process. So, it's really when the other shoe dropped in 2022, we didn't budget for that, we weren't prepared for that. We all hoped that hadn't happened, but it did. And because of various things that were going on in the economy, namely post-COVID, inflation, interest rates. The interest rates affected the investment income that the insurance companies depend on. And then when they had loss of interest rates, investment income and actual losses, that really sent the reinsurance marketplace in a tailspin. And so that was reflected in our renewals here in Florida. So where we were in 2023, really very simply supply and demand issue. So we weren't able to get the insurance that we wanted, and so the rates went way up. Very, very simple economics. There was not enough supply and there was a lot of demand. So I'll leave that there. Also, catastrophic losses have gone up nearly 700% since the 1980s. Also, I love this fact, the population of the United States has also increased by 47%. And a lot of them have come to Florida and have settled in catastrophic prone areas. If you look at the population growth, everybody's kind of, there's a lot of settlement around the coastline. So we've put our assets in peril to catastrophes as well. All right, so where are we today? So our goals really this year were to increase the limits that were available to the authority, reduce the deductibles, hopefully get rid of that stated value coverage. So we looked at, we every year for your property insurance, we look at the entire marketplace. We've looked at the excess and surplus lines market many years. It doesn't make sense. So we really focused on a couple of other options this year. Number one, with our StarTech, we tried to negotiate the deductible with them. They said no. And so we said, well, is there another way we can get that deductible lower? And that didn't really work either. I'll show you the numbers in just a minute, but we looked at what's called a deductible buy-down or difference in conditions policy. We looked at supplementing the coverage with alternative risk transfer product called PRMRWSA, which again I can explain, but that will take another 5 or 10 minutes. And then we also looked at a pooling arrangement that's set up for Florida government. So what we came up with is basically a flat premium. We came up with a $100,000 minimum for hurricane versus $7.3 million. And we also came up with a perhaps easier, more turnkey claims handling arrangement with the pool. So thankfully we were able to hit most of our goals that we were trying to accomplish in the marketing process this year. So here are the options. A lot of small print, bottom line, expiring premium, $726,000. StarTech's renewal was almost $100,000 more, 13% increase, and we were able to bring an option with better coverage at approximately the same premium as expiring with Preferred Governmental Insurance Trust. The deductibles, wanted to compare not only was the named windstorm deductible option better, but we reduced the all other perils deductible for things like fire, lightning from $100,000 per occurrence to $25,000 per occurrence for your real property and $5,000 for your equipment. Also, if you have a regular flood, your deductible is $25,000 instead of $100,000.
Sure. Yeah. Go ahead.
Michelle, could you go back on that? On the named storm, can you explain that, the difference between the two, please?
So for named windstorm, pretty much all policies have a special named windstorm deductible in Florida. And how the incumbent, your current coverage and their renewal offer works is they will take that statement of values with the $143 million times 5%, and that's your deductible. So that's your current and renewal option from StarTech. With the recommended option to Preferred Governmental Insurance Trust, they will take 5% of each line item. So if you have $1 million structure, then you would take 5% of that $1 million or $50,000. So it's much, much lower, up to $100,000. Does that make?
I had another question since we paused here. In the paperwork, it says that there was a reassessment or certain assets were reassessed as low risk and assets and adjusted the property values as appropriate. Does that mean we had certain assets that somebody determined we shouldn't even insure? So did we drop? Because I can't tell from the schedule if we've actually dropped what somebody considered a low risk asset.
Well, so one of the benefits of the StarTech program is because it's a specialty utility insurer, they would insure items that the regular market typically does not insure. So we had some subaqueous lines in Punta Gorda in the Bay there that StarTech would insure. We had overhead transmission lines, which I understand you all are putting all those underground anyways. And then we had yard piping, which years ago, we just put, some limit in there and they agreed to insure it. So, Preferred Governmental Insurance Trust was not going to insure the yard piping or overhead transmission lines. So when we talked to staff about that, we've never had an issue with the yard lines. So we determined with staff that was low risk and not a big deal to insure. And we would make the concession with the other benefits in the terms and conditions on the policies not to insure that.
But what was the total dollar amount of what we decided was not insurable?
I think it was about $7 or $8 million.
Okay, did the incumbent also have the opportunity to drop those off the policy so it's apples and apples, or was their quote inclusive of $7 million of insured assets?
Their quote was inclusive, so that's a coverage difference in their quote versus ours.
Yeah, that's a big difference. So,
Okay.
so the incumbent provided a quote with an additional $7 million worth of coverage, and the new company is not providing it. Therefore, their costs can be lower. And I'm trying to figure out how the shift. It's almost a break even on the premium.
Mm-hmm.
It's almost a push. And and when I read things about dropping assets, I can't find anywhere in the paperwork how much was dropped. But now you're telling me about $7 or $8 million. I mean, that's significant. So it's really not an apples to apples comparison on covered items. One bid
Agreed.
one way and another bid the other way.
Yeah, there's a lot of components here. Regardless, the coverages, even if the premium was the same, but the benefits and the coverage are huge.
Yeah,
So even if it's adjusted.
I'm not disputing that. It's just, when we try to drive down what's actually getting insured, I think we should know we're losing $7 or $8 million worth of coverage that staff has determined we really don't need until the next storm hits. And then we figure out maybe we need it. So we're taking on the additional risk then for those assets that were considered low risk.
Yes, sir.
Okay, just want to make sure we all understand that. Thank you.
And that is on this slide, by the way, under the I guess I'll call that peach or orange, Preferred Governmental Insurance Trust. There's a comment about that. So we did trend all of the values by 3%, and then we removed the yard piping, overhead transmission lines, and subaqueous lines. So the total insured value with for governmental insurance trust is $136,517,720. So yes, it is lower. Also, you get up to $136 million for named windstorm coverage. You get up to $136 million for fire coverage. You're not really at risk for storm surge, but you get more flood coverage. You get blanket coverage. And this is a pool limit, so you are sharing reinsurance with other governmental entities. The trust buys, so there's analytics that are used in the property insurance market, and the trust will buy at least to the 100-year probable maximum loss for the entire trust. So I'll tell you, in Hurricane Ian, they had about $50 million of losses. So I believe that's adequate, and they are looking, they don't have their reinsurance structure finalized as of today, but I am positive they are looking to increase their reinsurance limits as well this year. they had to drop their reinsurance last year because they couldn't get it. They did not quote on the authority last year. They were not providing any new quotes last year. So they were, they were also having effects in the marketplace. So perhaps, Commissioner, if we were to make the TIV similar to expiring this $94,000 or 11.5%, would be a little bit different. But again, that StarTech that's probably the only coverage advantage that they have. And there's a lot of other coverage advantages. So sometimes it's really hard to set apples to apples because the programs are different. And then you may recall I mentioned at the beginning of the presentation, your workers' comp insurance is with the Preferred Governmental Insurance Trust. So the authority is already a member of the trust, so there's no additional paperwork or anything like that to do to take the recommendation. And the next slide is Ann's motion. And so, does anybody have any questions before we go there?
Any member questions? Go ahead, Commissioner.
Yeah, maybe Michelle, just have some discussion here for a minute. So, last March, I sold my insurance agency after 37 years and being in the business. It was one of those times where like buying a boat, selling a boat, both of them were great start, and it was great to be out there. Especially in Florida, I call it the NFL of insurance. But I had a nice talk with Michelle and staff yesterday, I believe it was, or the day before. I don't want to sugarcoat this. I have some deep concerns. I would suggest I'm term limited out. I'm off the count. I won't be on this board or the Sarasota County Commission board come this November. So hopefully my comments carry some weight here. I think we are so far from shore of the basics of insurance, it's alarming. If Michelle, if you could go back to the first slide here, that shows the property. So, correct me if I'm wrong in any of this, Michelle, jump in. So what happened here was we have, what did you mention, Ann, what's the total value of our property? Not insurance, what's the total value?
Our net assets, which would be depreciation,
263
million.
Okay, so $263 million. We have a limit of $25 million and pay $726,000 for it. So I was just scribbling some notes. So a weak analogy, but one nonetheless, is if you had a house worth $2.6 million, I'm just taking zeros off. If you had a house that was worth $2.6 million, you insured it for $250,000, and in this case, you paid $726,000 for that. So the basics of insurance, backing way out of all of this, is transferring that risk to some other entity for a risk you can't sustain yourself. You don't kind of limp into that. We insured a $2.6 million house for $250,000 and paid a fortune for it. Back then, I probably would suggest just keep the $726,000, put it in your bank, set it aside in a separate fund, whatever. It definitely is not, in my mind, the definition of insurance and what you're truly trying to cover here. My bigger concern is, which hopefully I'll leave today, is I highly suggest that this become a much more competitive process. We had a long talk yesterday of the difference between agents and brokers, and there's a definitional difference of it. I highly suggest you have two different agents that come with other carriers and you compete for the business. It's surprising how that works, and this isn't speculative. This was, I did this when I was on the board at SwiftMud, and these can have some massive, massive benefits to the taxpayer. And we haven't even talked about health insurance. So, with that, I don't know where to go with this, other than take a minute, Michelle, if you could, on the trust. What is the exposure of the trust versus regular carriers versus surplus carriers? Can you educate the board, if you would, on that, please?
So there is some additional data in your packet about the trust, and Commissioner Moran, do you want me to discuss the reinsurance structure?
I'm talking about the risk of not paying. you knock on the door and say, I have a claim, I need to be paid, is there a potential for non-payment?
So, in the event that there is and this would be a catastrophe, a hurricane type event, that the reinsurance was exceeded, then the reinsurance would be paid on an allocated basis to the members. But I will tell you that there is a spread of risk. The members of the trust are located throughout the state of Florida, and so that's what we call a spread of risk. And so the way that the trust sets it up, and not just this, there's many trusts that operate in the state of Florida. Thank goodness, because if they weren't here, the public entities would be in a world of hurt. But which obviously that was only Irma. I think the other big impact where there was 4 storms that hit Florida was Charlie. Can't remember the name of all of them now, even though I lived through it. That was, I think, a $40 million total, including Wilma. So the 04-05 season, they paid out about $40 million. And with Ian, I think they paid out about $50 million to the members of their trust. At the time that Ian hit, they carried $340 million of reinsurance. And currently there's $240 million of reinsurance, which they expect to increase this year because of the more favorable marketplace.
Chair, if I could. Next, I think it's the next slide on the liability, Michelle. Is there any, is it taken into account in any way related to the governmental nature of this body having immunity of $200,000, let's say?
Absolutely. This is a special government program that recognizes the sovereign immunity tort protections that the authority has.
Meaning their exposure would be $200,000.
Well, not necessarily. If it falls under the sovereign immunity, there's not a claims bill. If there's a claims bill, if there is a claim which could be filed in federal court, which would happen in your professional liability coverages. So there are circumstances where you would look at having higher limits than the $300,000 per incident cap that currently exists.
So defense is inside this limit?
Defense is outside the limit.
Okay, so I'm talking about the actual claim, not the defense. Is the maximum exposure to the carrier is $200,000?
Well, so the way I understand the statute works is it's $200,000 per person and $300,000 per incident. So for any one incident, you could have up to a $300,000 exposure. When the claim is being adjusted in this program, they would consider the sovereign immunity protections that the authority has. There are certain circumstances where, so very specifically, a claims bill is brought so that you could have a settlement that was more than the $300,000 cap. And B, there are certain circumstances where you would need to agree to this also, you may want to go ahead and avoid the claims bill process and pay limits. For example, I've not seen this happen very often, and it was not with this carrier, but it was with another governmental carrier where there's a horrible, horrible car accident. The person is going to be a vegetable for the rest of the life, and the insurance carrier and the public entity decided that they were going to pay policy limits to these individuals. So that could happen as well.
I guess what I'm trying to get at is that in a traditional non-governmental business, the carrier's exposure is $1 million and charge an appropriate amount of premium for the appropriate amount of risk. In this case, the exposure is $200,000. Are you suggesting it's baked into the cake of the price?
Absolutely. Absolutely. I mean, for the vehicles particularly, you can really tell there, the vehicle insurance in Florida for commercial vehicles has gotten quite pricey, and across the nation it's gotten very pricey.
So particularly on your auto, you can tell a huge difference in the rates for public entities versus regular commercial risk.
Thank you, Chair. If I could, just one more second, and then overall, backing way out of this, you guys, the 8 trillion million view over this is the shopping process in the interest of the taxpayers. If you come out of the gate properly with how you shop it, there'll be natural competitive behaviors in the marketplace from the agency sides and the carrier sides of coming about in the taxpayer's interest. I don't see where you have much choice here. Today, you've got a renewal that's looming. What I'm suggesting is the time doesn't allow, but I would highly suggest, and again, I won't be here for the next renewal, but I would spend way more time of the structure and best practices of how you shop this versus doing this in a 15-minute presentation. And that might include, which we did at SwiftMud, it's a separate subcommittee. And I would highly suggest in that subcommittee, if you have an elected official that's brought about by the taxpayer, someone in the room that represents the taxpayer, agents, brokers, staff, others, we represent the taxpayer's money in this. And in that subcommittee, having someone that's a taxpayer elected person would be a high recommendation of mine, but Chair, I'm done, and I'm listening for any of the other stuff.
My question is how is this bidding process, like I'm trying to track how this even bidding process is going about. Are they doing it as if RFP goes out, competitive bidding process, or is it we've been working with this company for so long that we feel comfortable with them? Is that how this is being played out right now? I'm only asking because I don't know. That's kind of I'm trying to get the
Chair, if I could
yeah.
I would let staff and Michelle and others answer anytime it's appropriate. This is my perspective on it. Is there's a difference between an agent and a broker. It's a definitional thing in our world. An agent represents carriers. An agent does not represent you. So if people say I'm calling my my local neighborhood agent, it's not your agent. It's the agent for State Farm, Allstate, Progressive, whoever. A broker, definitional broker, represents you and goes out to the marketplace. The broker, then it gets really touchy because how are they compensated? So hopefully you guys are smart business people. It's, there's commissions involved here versus fees, for example. So the way that I felt personally is the best way to do that is you might have one or two, you'd have 2 or 3 agents. Let them select which carriers that they go to present. You don't want one carrier going out to all the market because they do what's called blocking the market. You have one agent goes out and blocks all the markets, so the other agents can't even get in and get that quote. You have 2 or 3 different agents. You assign them carriers, let them ask which ones they want, because they might have really deep relationships with some. And you let those 2 or 3 agents go out to the marketplace and bring you all sorts of choices to the subcommittee. And then the subcommittee brings it to you as a board and says, after our review with lots of competitive tension, healthy pressure, you'd be surprised what shapes out of that. But again, others have different opinions on that, and I recognize it, and I'm listening, for sure.
Any other questions? Okay, so what we have here is an action item. We have a motion that I'm looking for.
Chair, if I could just one more question.
Yes, sir.
I'm so sorry.
Go ahead.
And did that recommendation last year come with a recommendation from the agent broker?
Yes, sir. Every year, Michelle, that I've worked with her, she has provided a recommendation after we have reviewed it with myself, Mr. Coates.
Okay.
And just
Just
for the board's knowledge, with the renewal last year, even though we had like over 80% premium increase, you were talking about the commissions. Michelle, actually, they took a lower commission to help us out. So I just want the board to understand, like, she has been a really good partner, and I completely agree with what you're saying. And it's always good to shop around and see what we can get the best deal on.
Chair, if I could.
Yeah.
I'm not begrudging anybody making commissions, believe me, I fed my kids on it. So, but I want it done properly.
Yes, sir.
But the recommendation was for $726,000 for $25 million for the coverage.
Yeah, there was really no other options last year that weren't even close.
Well, the option was to do nothing unless, is there some third party that's putting pressure on you? For example, in the normal marketplace, you have your mortgage banker is requiring you to have insurance, your lien holder on your car. Did you have any third parties putting pressure on you to have that insurance?
So this is more towards Doug. He'll have to correct me if I'm wrong. However, statutorily, as a government agency, we have to have insurance, and we can't self-insure unless the premiums are over $5 million a year. Right?
Yes, but also the bonds require that we have some type of coverage, that.
Do we know those limits?
Right, on the facilities. I don't know the bond provision, I can find out, but, I haven't looked at that for the meeting.
Well, now I'm getting alarmed. Was the $25 million enough for our bond covenants?
Yes, we're fully in compliance with our bond covenants. I don't recall a specific dollar amount that's tied to the bond covenants in terms of insurance, but just that we have to have insurance coverage to.
I understand that staff has analyzed this based on the fact, the plan has been hit directly by two hurricanes, one a strong category 4, which was Charlie. And so they looked at where the damage has occurred and where potential damage could occur in the future. Some structures they were already hardened, and then they were hardened even more after Charlie. So some of the structures are very unlikely to have any damage from a hurricane. So the theory was they did an analysis and determined, where should the coverage lie? What were the vulnerable components? Having the unique perspective, having two storms directly go over the planet in the last 10 years. So it's something that they looked at hard in order to be able to reduce and shift some of the risk and to reduce the cost of our very high premiums. So.
Fair enough, thank you, Chair.
Yeah, quick question. So when the new reservoir comes online, that'll have to get picked up.
Yes, sir.
Do we have any idea what that number is? I mean, that's...
Well, I think that'll depend on how much it costs at the end of construction.
Yeah.
Our engineers are here; they'd be able to help that out.
That'll be an interesting insurance discussion for a future date. But if you look at these big ticket items in the pipeline, and
I can only help you pay for things, not build them.
I think it's a good recommendation, the idea of figuring out different ways to shop it, because as we know, and I'm a layperson when it comes to insurance, my own insurance, but every year it becomes more and more difficult to obtain insurance that's affordable and that covers the things that you need to have covered. And so I think every year we need to look at it with fresh eyes. I think this is a great idea to go out and find a different and unique way to go get more competition going and get more bids. As this year, there's just not a lot of people getting, at least on my home insurance. I mean, I have 2 companies. I couldn't even get, state citizens policy in my house. So it's one of those things where I think the market is to continue to perhaps continue to consolidate or reduce, and premiums keep getting higher. So I think an analysis of both the cost and then also the risk, and I think that's something staff did last year internally. Perhaps we can, and with some of our companies, we can look at that a little harder, especially coming up with $650 million worth of construction is going to go in there with an expanded treatment plant and a reservoir. What can we do to make sure that coverage? And as you had said in a previous meeting, Commissioner, how can we balance that risk, and have that as far as, okay, we assume some risk, but then other risks we don't want to have.
Mr. Coates, if we had like a workshop on insurance before?
I don't recall us ever having a workshop on insurance, but we certainly could.
Yeah, it might be something to consider. Commissioner Moran made a comment about, having some type of select committee. I don't know if it'd be prudent even, let's start maybe with a workshop that we're all involved and we can get an education on the technical side of insurance, because it is technical, and, it really isn't. I've only been on this board, I think this is my 3rd meeting, and, you dig into these details, and sometimes you just got to go in, head first instead of feet first to understand it a little bit better. There's a lot of information to digest here.
Yes.
And, what a lot of residents have found out is after a catastrophe, that's when you find out what insurance you really have.
you think you know what you have, it's in the binder, but when the disaster hits, you realize, wait a minute, this isn't what I thought. For instance, a lot of people thought they had the screen cage enclosure included. You would think so, it's attached to the building, but in the fine print, it was excluded. That was something new, I think that came in a few years ago. See, Commissioner Moran wants to comment.
Oh, that's throwing red meat in front of me. My dad's 92 years old, still alive. He was a lifetime insurance agent. He said exactly that. Is what's worse than not being insured is not being insured and you thought you were. And you're annoyed because you were paying for it. But and I promise I'll be quiet after this. Is that we talk about everything. The page you really want to flip to in the 3-ring binder is what's excluded. And it's shocking, to your point, the example of screens and whatever. These are policies that are not off-the-shelf policies in the sense of an ISO type relationship. They are ISO policies, I'm sure. I hope. If not, they're manuscripted policies. They can cover something on Tuesdays of the leap year if they want. So, to the point, is diving deep into that with people that have interest in that, I think is critical. But all right, enough. Sorry.
Okay, we're looking for motion on the insurance unless there's no other comments.
Just appreciate Commissioner Moran's take on some of this stuff too, because it's not every day we dive into this, but we are as stewards of taxpayer dollars. If there's no other comment or question, Mr. Chair, I'll make a motion to approve binding coverage for Peace River Facility Insurance with Preferred Governmental Insurance Trust and Hiscox for not to exceed premium of $727,841 for the upcoming year, April 30th, 2024 through April 30th, 2025.
We have a motion. We have a second. I'll second the motion. Any discussion?
I think, to your point on the list of assets, having a review of that so that you know what you're getting as far as coverage in the coming year here, and maybe having an opportunity to put together a second board.
Okay, we'll go ahead and vote. All those in favor of the motion signify by saying aye. Aye. All those opposed? We have motion carries 3-1 with Commissioner Moran consenting. We'll move on to item number 4, the draft 5-year capital improvement plan and 20-year capital needs assessment. Mr. Mike Knowles.
Good morning, sir. Good morning, Commissioners. Mike Knowles with Authority staff presenting draft 5-year capital improvement plan and 20-year capital needs assessment. This presentation is for information purposes only, but we are looking for input from the board as well as your professional staff to finalize this plan. I'll go over the purpose, development, and application of our capital improvement plan, talk about an overview of the 5-year and 20-year CNA as far as budget by project type, cover the highlight of the projects within our 5-year CIP, and discuss next steps and schedule for the capital improvement plan. So the purpose of our capital improvement plan is to serve as a blueprint, not just for sustaining the authority's infrastructure, but for making improvements that handle the long-term needs in our region. This report or plan is the culmination of input from 4 of your authority departments: the planning department headed by Jim Guida, engineering by Terry Holcomb, operations by Richard Anderson, and finance by Ann Lee. Aside from input from the 4 departments, another piece that the authority leans heavily on for our capital improvement plan is the integrated regional water supply plan. This plan helps the authority focus on the long-term vision in the region. This report is updated every 5 years, and we're currently working on the 2025 update. The last piece of our puzzle is our customer input. Understanding our customers' needs as far as infrastructure, water allocation, and the timing of that helps us plan out the schedule and budgets for our projects. All those pieces come together in our capital improvement plan. So looking at the overview of the 5-year CIP and 20-year CNA, We have 15 capital projects identified, 8 of which are regional transmission mains, 2 of which are in our 5-year CIP. Then we have 4 water supply projects. 2 of those are in our 5-year CIP, and then all 3 of our system-wide benefit projects are within our 5-year window. Looking at the projects by project type in our capital plan, we have $44 million set aside for, or budgeted for system-wide benefit projects, $73 million for our regional transmission mains, and $502 million set aside for our water supply projects, totaling $619 million in our 5-year CIP. If you look at the spending by fiscal year, you can see that our upcoming fiscal year is by far the largest one that we're anticipating. That coincides with the start of construction for a new water supply project, as well as the ongoing construction from 2 of our transmission main projects. You can see that there's $126.9 million in grant funding that's going to be utilized in the next 5 years. We're fortunate to have a large piece of that from the Southwest Florida Water Management District through their Cooperative Funding Initiative. And we do have some state and federal funding. Looking at the 20-year CNA, this is inclusive of the 5-year CIP, not in addition to, but we have $44 million set aside for system-wide benefits, $341 million set aside for water transmission main projects, and $809 million for water supply projects. All of that totaling $1.194 billion. And if that number sounds familiar, that was the Powerball jackpot just a little bit earlier this year. And no, I did not win that.
Neither did I.
I think somebody in New Jersey won it, so hopefully they're moving to Florida and bring those winnings with them. Looking at the spending by fiscal year in our 20-year CNA, you can see that, again, we have that large expenditure projected in our next 5 years. But further out, at the 10-year mark, we do have another uptick in spending, and that coincides with our next water supply project. That would be the Brackish Reverse Osmosis Water Treatment Plant. There is currently no additional funding, grant or otherwise, identified outside our 5-year window. Secured out also. So to highlight the projects in our 5-year CIP, first is our water supply program. This includes the surface water supply expansion project, which is really 2 projects within that. We have the Peace River Regional Reservoir, number 3. This is the 9 billion gallon reservoir, intake pump station, and a new pump station on Peace River, as well as the conveyance piping between those infrastructure assets. Then we have the Peace River facility expansion that increases our permitted plant capacity by 18 MGD, average annual daily flow, in conjunction with our PR3 project. Our 2 transmission main projects are ongoing, and these pictures have some significance. These are the first sticks of pipe that went into the ground for both of these projects. If you look on the left-hand side, Phase 2B is approximately 13 miles of 42-inch diameter pipe serving western Charlotte County. Just started construction last month, and we have 1,600 linear feet of pipe in the ground as of today. On the right-hand side, we have our Phase 3C pipeline in Sarasota County. That's approximately 8 miles of 42-inch diameter pipe serving northeast Sarasota County. Started construction in October of last year, and we have approximately 1.5 miles of pipe in the ground. We have 3 system-wide benefit projects, the first of which is the Water Resources and Construction Building. This 5,000 square foot building would take the place of our 60-year-old, we call it ranch house, that the staff has been utilizing, which has suffered some damage from the last 2 hurricanes and has reached the end of its useful service life. Our second system-wide benefit project is the RV Griffin Reserve Solar Array. This would be the authority's first solar array and the first step towards a renewable energy source. Its preliminary design is at a 2 megawatt structure with a 7-year repayment on that investment. The third project is a partially treated surface water aquifer storage and recovery project. The authority currently fully treats the water that's sent down our ASR wells, and then after it's pumped out, sent to Reservoir 1, it's again fully treated by our plant. So this project would look to partially treat the water that's sent down the ASR, since the authority is fully treating the water when it comes back out. I will say that the design for this project is 100% funded through an FDP grant for $1 million. So the next steps and schedule for our capital improvement plan. This draft has been disseminated to your professional staff, and we plan on meeting with them May 1st at our professional staff meeting to gather their comments. Together with comments from the board today, we will be looking to finalize our capital improvement plan and bring that back to the board in June. With that, I'd like to entertain any questions the board has.
Any member questions or comments? Okay, thank you, sir.
Commissioner, if I could, just for those of you that probably already know, Commissioner Langford's not here today because he's at a baseball game this afternoon. So he's got a family member that's playing for the Rangers, just drafted last year, just called up for the big league. So 110 today if you guys want to watch. He's actually setting some records. So just
Thank you, sir. Okay, next we'll move on to agenda item number 5, which is the 2014B refunding phase 3C regional interconnected financing. We have Ann Lee presenting.
Well, it's just an Ann Lee of your staff. I'm pleased to introduce Molly Clark with Public Resource Advisory Group, or commonly known as PRAG. She is the authority's financial advisor, and she'll be presenting on the 2014B refunding opportunity, as well as finalizing the Phase 3C project. There you go.
Good morning, I'm Molly Clark with Public Resources Advisory Group, financial advisor to the authority. And so we'll be presenting this morning the plan of finance for the refunding of the authority's outstanding 2014B bonds, as well as putting in long-term funds for the 3C project. So as your financial advisor, we're always keeping our eyes on the municipal market and what market conditions are showing us, and particularly when we're talking to our clients about issuing any new debt. So this slide presents rates in the municipal market going back to January of 2021 through March of this year. And as you can see, today's rates are significantly higher than rates were when we saw the lows back in 2021. Although year-to-date in 2024, despite rates being higher, we are seeing significantly less volatility than we did see in years 2022 and 2023. So rates are higher, but we do see that the market is somewhat more stable. With that said, short-term rates are showing more volatility than our longer-term rates, and largely this is driven by Fed action and commentary as everyone is sort of awaiting what is the Fed's next move and when is it going to happen. Moving forward, discussing the structure of the Series 2024 bond issue. This bond issue will be put in place to accomplish two primary goals, as I mentioned. The first, to current refund the authority's outstanding 2014B bonds for debt service savings, and the second, to put long-term financing in place for the 3C project. Now, given that both of these financing needs are ready to go to market at the same time, there are basically economies of scale and efficiencies to be realized by the authority by financing both of these needs in a single bond issuance. Cost of issuance will be less than they would be had you entered the market with two deals simultaneously or at separate times to accomplish the two different financings. And also, equally important, your staff will save significant time in just working on one transaction rather than having to work on two. So taking a look specifically at the 2014B refunding component, the authority's outstanding 2014B bonds are about $55.9 million, which can be called on October 1st, 2024. Currently, we estimate that this refunding transaction will generate net present value savings to the authority of approximately $8.2 million, or 15% of the amount of the bonds refunded. Now, it's important and helpful to note that the authority's threshold for current refunding is 3%. So 15% is a really strong outcome, and this represents a good financing opportunity. On an annual basis, our estimates currently would translate to about $1.1 million per year in annual debt service savings each year from 2028 through 2035, which are the years when the existing bonds and the new refunding bonds will amortize. Now, taking a look at the new money portion of the financing, the Phase 3C pipeline project, this here we've laid out preliminary estimates for the new money portion of the issuance, assuming a project fund deposit of $32 million and a 30-year final maturity on this portion. We estimate annual debt service on this would come to approximately $2 million per year, each year through the 2054 final maturity. Now, taking a look at the impact of this new issuance within the context of the authority's existing debt. This slide presents in the light blue bars the authority's annual debt service. Currently, the existing annual aggregate debt service in the light blue bars, and your annual aggregate debt service after the issuance of the 2024 bonds is shown in the darker blue bars. The existing debt service is your 2014 B bonds, Series 2015 and Series 2020. This debt service currently is level at about $10.4 million through 2035 and is fully matured by 2040. Once we refund the 2014 B bonds and add in the Series 2024 new money, your new debt service will include your Series 2015, Series 2020, and Series 2024 bonds. After the issuance of the new debt, you'll see as represented by the dark blue bars, debt service increases. We increase as a result of the new money portion having been added to the debt portfolio, and the final maturity is extended out through 2054. After 2040, when the prior debt would have already matured, all of the outstanding debt would be related to this 3C project only. Now, talking through the financing schedule and next steps. With the board's authorization today, in the next few weeks, we would begin the process of drafting bond documents, securing ratings, and going through the due diligence process. We would return to the board in August for formal approval of the financing and the bond documents, and at that point would be in a position to enter the market, sell bonds, and move to a closing. At this point, we're targeting a closing for the bonds in late August. Now, after closing, the proceeds of the refunding bonds would be held in escrow until October 1st, 2024, when the prior bonds can be repaid. And the new money bond proceeds would be drawn to continue to fund the 3C project, which is expected to be complete in March of 2025. At that point, that sort of concludes my prepared remarks, bringing you what we're looking at doing and why, and sort of the how, the expected timeline of how this would occur. So I'm happy to take any questions if you have any, or pass it back over to Anne.
Yeah, I have a quick question on the Series 2014 B refunding.
Mm-hmm.
Are there penalties and costs associated with that?
No, you pay your costs of issuance, which is paying bond counsel to draft bond documents, disclosure counsel, to draft your disclosure document. However, those costs are embedded in the savings number that we've provided. Also, because you're going to be issuing the 3C debt anyway, this is sort of the efficiencies or the economies of scale that I mentioned. Getting more projects done at the same time under the same bucket of issuance costs that you will be paying.
Well, let me separate the two, fees as opposed to penalties. Are there penalties?
There aren't penalties.
Okay,
No.
that's what I wanted to know.
Okay.
I know the fees are probably embedded in the actual cost.
Yeah, no penalties.
Okay. Any member comments, questions? Okay. Thank you for the presentation. So, gentlemen, I believe this is an action item here. Yeah. We're looking for a motion.
So moved.
Okay, so we have a motion to approve and authorize staff to proceed on the 2014 B refunding effort and Phase 3C regional interconnect long-term financing effort. We have a motion and a second. Is there any further discussion? Any opposition to the motion? Hearing none, passes unanimously. We will move on to item number 6, the new water supply needs and regional project selection.
Good morning, Mr. Chair. Richard Anderson again, authority staff. Pleased to present item number 6. We're going to talk about the most recent new water supply needs or new water supply requests from the customers, as well as the regional project that we're proposing to meet those needs. Since we were here last in February for the workshop and the board meeting, authority staff has had the opportunity to meet with all 5 of your professional staffs and talk about demand projections as well as the surface water expansion project. And as a result of that, Sarasota County took action, provided board direction to participate in the surface water project at 12 MGD and up to 17 MGD should other members elect not to participate. Last week, the Charlotte board also took action to recommend staff purchase 3 MGD in the project. So we're going to share some of those new tables with you and those projections. This is an action item, so following my presentation, we're going to request that you authorize staff to continue on with the design, bidding, construction of the surface water expansion project. This is just a quick agenda of what I'm going to cover. I'm going to go through a brief overview, background of some of the key milestones of the project and how we got here today. Then we're going to look at the new water supply quantities and the requests from the members, the regional water supply project, and some new updated costs that we received from our construction manager at risk, and then the water supply timeline. So first, a little bit on the background. As you can see here, February of 2019, we received our 50-year water use permit from the Water Management District. That authorized us to withdraw up to 80 million gallons a day from the river on an annual average basis. This in itself was an 18-month effort. It actually started back in October of 2017 with the permit application to the district. 2020, we completed the Integrated Regional Water Supply Plan. Mr. Knowles talked about that briefly. That calls out the long-term demands and generates a menu of projects that would meet those demands going forward for long-term regional needs. That was completed in 2020. Also, in May of 2020, the board approved HDR Engineering as the top-ranked firm to proceed with the Peace River Reservoir feasibility and siting study. That was their work order number 1. In 2022, the board approved work order number 2 to HDR. They completed the feasibility study and then were awarded the 30% preliminary design work to move forward with the preliminary design on the project. Then in August of 2022, the board selected and voted that the surface water expansion project was the preferred project to meet the needs of the region. What this did was it allowed staff to continue working on the design of the project. It also maintained our eligibility for water management co-funding. It allowed us to go out and seek other funds from the state, like member sponsored projects like you heard Katie talk about from state appropriations. So it allowed us to keep moving forward with seeking out grants to offset the costs to the customers. So far, we've received $133 million in offsetting funds to offset the cost to you, the customer, on this project. And then last year, 2023, we completed the preliminary design, and then the board approved work order number 3 to HDR to move into final design. We'll point out again, all up to this point, the final design, preliminary design feasibility study has all been paid for through these grant funds, and there's been no cost to the customers up to this point. We also completed the pilot study for the water treatment plant and the preliminary design for that piece of the project. That was completed in September of 23. I want to take a look at the most recent updated requests from customers. As I mentioned, these are, the original slide that was sent with the board pack was a little bit different. You should have received an updated slide on this, and the difference would be the Charlotte County column. Well, I'll go through it quickly here. So you can see DeSoto County is going to need about 1 million gallons over the next 20 years. As I mentioned, Sarasota County is in for 12 MGD and up to 17 should no other customers participate. Manatee County has indicated they need 10 MGD, but that request doesn't start until 2036, so they would not be participating in this first surface water expansion project. And then Charlotte County, again, indicated last week that they're going to be in for 3 MGD on the project. We've also been in some discussions with Northport. They're very interested in participating. They don't think they can meet the timeline to get in at this point, but they are looking at it, and I don't think, well, we do have somebody from Northport. I don't know if you have anything you'd like to comment or add, Nancy, but you're welcome to.
If you want me to.
It's totally up to you. If you'd like to give any input. We'd love you to. This is Nancy Delanar. She's the utility director for the city of Northport.
Good morning. So we are very interested, but just out of respect for our commission, we have not been before them yet. So we are intending right now, or in the process of producing a letter of intent, which we will go through finance, through our legal, off to our commission, and then move forward. But we are very interested in 2 million gallons per day. If there's any questions, I'd be happy to answer them.
Any member questions? Thank you.
Thank you.
So as you can see, the bottom right corner there, 25.6 MGD, we have a long-term 20-year need of approximately 26 million gallons a day, potentially 28 if Northport comes in on the project. So the only project on the list that can meet those needs, or at least meet a portion of those needs, is the project we've been talking about, the surface water expansion project. And again, just to refresh the board, there's 2 components. Mr. Knowles talked about it as well, but the supply side is the 9 billion gallon reservoir, new pump station on the river, all the interconnecting pipes that go between the river and the reservoir, to all the conveyance piping that goes along with that, and a new reservoir pump station to send the water to the treatment plant. On the treatment side of that, we have a new 24 million gallon a day permanent capacity water treatment plant, chemical storage, and belt filter presses. And that 24 MGD of capacity will allow us to reliably yield an 18 MGD average day to the customers. Now I want to show you some new costs that we've received from our construction manager at risk. The column on the left is the cost that we've been sharing for about the last 12, 14 months, since March of 23. This is the 30% design cost for the project. It includes both the supply component and the treatment component, and that was $488 million. This is not including the grant funding. Well, this does include the grant funding. This is not the total cost, which we're going to get to in a minute, to the customers. The column on the right is the updated costs that we've received from our construction manager at risk, Archer Western. They've performed a deeper dive, more of a construction-related evaluation of the costs, and looked at all the major components of the project, and you can see there that their cost estimate is $518 million. Now, their estimate does include some high-level value engineering that we've been talking about. Some of that includes not doing micro-tunneling under the roads, but doing open cuts, which saves a tremendous amount of money. They're also looking at a redesign of the reservoir pump station that will save quite a bit of money. So we're continuing with value engineering. We're not done, but some of those ideas and concepts have been rolled into this number. Again, you can see it's about 15% higher than our 30% estimate we've been carrying for the last year, but in today's market, that's not completely unexpected. This slide shows the construction costs and then some of the other probable related costs that we're going to experience during construction. You can see the PR3, $28.6 million in additional costs. That includes mitigation at $15 to $20 million. So a big chunk of that is the mitigation portion of this project. So those add up to $31, $32 million. Total project cost about $550 million.
Excuse me.
Yes.
Does that mitigation cost, that includes the on-site mitigation that we're doing? Are we doing any on-site mitigation? I believe we were.
We're looking at all those options. That hasn't been determined yet, but yes, it includes the that's the worst case scenario should we do mitigation bank, on-site mitigation. And if Jim can elaborate if we need to, but that's the worst case scenario for mitigation would be between 15 and 20.
Okay.
On-site would probably be less.
Okay, so there's potential savings there if we
Correct.
identify on-site.
Correct.
Okay.
Yes, sir.
Thank you.
So again, these are, the related costs include construction, engineering services during construction, legal fees, sorry Doug, and other contingencies that might apply to the project. And I'm going to talk about those in just a second. So when you look at the cost to the customer, again, the $550 million, we have $122 million remaining to apply to the construction cost. As I mentioned, some of the grant funding of that 133 has already been spent on design, so we have $122 million left to apply to the construction. And that yields about $428 million net to the customers, or $23.8 per gallon. I do want to point out, those numbers do include about $54 million of contingencies built into these numbers. The earlier you are in the design, the more contingency you carry, right? Because there's more unknowns and there's more risk. So for example, on the water treatment plant, that's still kind of in its infancy. It's about 30% design. That's carrying about right at $25 million in contingencies alone. The reservoir being very, it's farther along in the design. It's dirt. There's a lot of knowns there. There's not a lot of unknowns. We're only carrying about $7 million in contingency on that. And then the conveyance piping and the pumping stations are about $22 million of contingency. So if you back those out, that's about $3 a gallon. So we're right at the $21 per gallon number that we've been sharing with you all along. Now, are you going to spend all the contingency? No. Are you going to save all of it? No. So we're going to be somewhere in the middle between $21 and $24 per gallon is our best estimate at this point. Real quick, this is a slide that you've seen before on the schedule. The preliminary siting feasibility obviously is complete. The green bar, the second line, is the work HDR is doing on final design for the reservoir project. They're in the little green hashed area right now doing final design. The CMAR is in the purple, the construction manager at risk, which I mentioned is Archer Western. They're in the hashed purple area right now doing preliminary design for the pumping and conveyance piece. And we are currently out with an advertisement for a design build team for the water treatment plant. And we'll be opening proposals on that here between now and the June board and bring back some information on that. But the goal, as we've talked all along, you see those three bars all line up in early 2028, and that's our goal, is to have these projects online, getting water to Sarasota County, DeSoto County, and Charlotte County by early 2028. And this is another slide I think we shared with you at the workshop. It just kind of highlights the fact that the surface water plant is really the only project that can meet the needs. We've been carrying the brackish water RO project as a secondary project, but with the demands being requested by you, the customers, of over 18 MGD, basically, we need to build this surface water plant now and get it online to meet your needs here in the near future. So with that, I do have a motion, but I'll take any questions or discussion before we move forward.
Any member comments, questions?
Okay, well, first I'd like to thank staff too for updating our water demand in Charlotte County, attend the board meeting, and everything's reflective, at our board discussion, it's reflective in the new schedule, so I appreciate you getting on that.
Thank you very much.
So this is an action item, gentlemen, so I'm looking for a motion.
Make a motion to approve it.
Yes, sir.
We have a motion by Commissioner Brose and a second by Commissioner Bearden to approve staff recommendation to proceed with design, bidding, and construction of the surface water system expansion project to meet customer requested new water supply demands by 2028. Any further discussion? Any objection to the motion? Passes unanimously. Thanks, sir.
Thank you.
We will now move on to item number 7, amending the master water supply contract. I believe Doug is going to present on that, and Mike Coates. Thank you, Jim.
All right, thank you, Mr. Chair, board members, Mike Coates, and your staff. Excuse me. We're going to talk about amendment of the master water supply contract to enable us to allocate the capacity that Richard Anderson just talked about from that new supply. And we went through a lot of this at the workshop, so I'm going to kind of speed through the first few of these slides just to refresh your memory. That didn't help. There we go. So of course, here's the facility we're talking about. And this is a facility that we would be expanding. In the foreground, you see the Peace River water treatment facilities with the intake on the Peace River, 120 million gallon a day intake. The 2 reservoirs in the background. That's where all of this expansion would take place. The current capacity at that facility is 34.7 million gallons a day has been allocated to our customers, and you can see the allocation split there with Charlotte, Sarasota County, and about 90% of that capacity, the remaining 10% to Northport and DeSoto County. That allocation chart will change very significantly based on what Richard just presented to you. So in the future, that chart will look quite different. The new project that we have proposed, the expansion of the facilities, isn't a new concept out here. We obtained the original facilities in 1991. We have expanded those facilities 3 times since then, and you can see all of those expansions identified on your screen. Peace River option in 2002, the regional expansion program in 2009, the 1991 rebuild in 2015. So this has been done before. Each time the contract has been amended, and those tables in the contract that we'll talk about have been revised. So not treading on new territory here. The Master Water Supply Contract includes more or less a cookbook on how to do this. How new capacity is requested, how new capacity is allocated, and how new capacity gets paid for. And this is just a clip out of there, but the customers request from the authority what they want, and we deliver that. The way that they request that quantity is every January you provide us with a demand projection. That demand projection goes out 20 years. In that 20-year period, you identify what you want from the authority. What do you want the authority to provide? And within a 7-year window, which the 7-year window is shown on there, 2025 to 2031, right now, we begin to develop that new supply. So that's why Manatee County isn't in on this first project, is because what they've shown is they need their first new capacity in 2036. And then new supply gets developed in blocks. We can't develop supply 1 million gallons a day at a time. We try and right-size that capacity. In this case, 18 million gallons a day provides us with the right-size capacity to meet the needs for this region for the next 15 years or thereabouts. Richard showed you this table. This is the updated table with Charlotte County included. And as Nancy mentioned, Northport is considering getting in on the project. We don't know today whether they will, but we do hope to know in the next few months whether they will get involved in the project as well. We have 4 tables in the Master Water Supply Contract that need to be amended to allocate new capacity. This is Exhibit C. This is the new capacity that you would request. new capacity that everybody's requested within that seven-year time frame. So this is in addition to what you already allocated in the Peace River facility. This table would be amended similar to this. It won't be exactly like that if Northport gets in, but you'll see the average day, you'll see an average day table, a peak month table, and a maximum day table, just like you see on the left-hand side of the screen, which is the existing Exhibit C, the Master Water Supply Contract, which has all zeros in it. Exhibit B is the water allocations in the Peace River facility. So we would add on what you have requested for new supply to your existing allocation, and the result is a new Exhibit B. And that's Exhibit B shown from what we know today. For this project, we would allocate another 18 million gallons a day, bringing us up to 52.7 million gallon a day total allocation in the Peace River facility. So that's, and again, this is the average day. We'll have a peak month and a max day capacity table as well. This table shows the cost allocation percentages for each of the projects out here, with the surface water system expansion cost allocation shown at the bottom. Charlotte with 16.7, DeSoto with about 5.5, and Manasota County with about 78% of the cost allocation for that project. So all of those tables would be amended and returned to each of our customer governments. That's 5 customers. Then they would have to take those to their BOCCs and get those approved or amended as they want. The last table to be amended is the DeSoto payment. And the history of this is originally the Peace River facility was a private facility. It was owned by General Development in DeSoto County. They paid taxes to DeSoto County. When General Development went bankrupt and the authority acquired this facility, being a public agency, we don't pay property taxes. So DeSoto County lost that revenue. And so the intent of the DeSoto payment was to try and replace part or all of that tax revenue that they would have received from General Development. What's in the Master Water Supply Contract is shown at the bottom here that payment to DeSoto County is based on the water use permit capacity of our water treatments, or of our facilities. And at the time, it was 32.7 million gallons a day. And the contract indicates that when that changes, when that 32.7 million gallon a day permit capacity changes, then the DeSoto payment would be readdressed. And it was readdressed in 2015 when we increased to 34.7 million gallons a day. So you can see on this table how that DeSoto payment has increased with time. And in 2015, you see that go from $750,000 per year to $796,000 per year in total. That's the total DeSoto payment. And the allocation is based pro rata on each customer's share of the capacity in the Peace River facility. On the right-hand side, you can see the allocated capacity, and you can see also a dollars per million gallon a day allocation calculation on the far right column. That isn't necessarily how the DeSoto payment was established. It's just something that when you look at it and not knowing exactly how they came up with the DeSoto payment to begin with, that seems to be a reasonable approximation of what stabilized starting in about 2010, and and now we're at $22,935 per million gallon a day allocated. And that going forward is what we have proposed to be the way to amend the DeSoto County payment. So contract methodology, not very specific, just says it's got to be done when the permit changes. Currently, it's $796,000 split pro rata, and it needs to be readdressed. The adjustment considerations are shown below. The water use permit increased in 2019 to 80 million gallons a day, so from 34.7 to 80 million gallons per day, annual average day. And DeSoto County requested that we consider inflation as part of an adjustment that would be made for the DeSoto County payment. So going through the process of looking at what that adjustment might be, we looked at 2015 through 2033. 2015 was the last time that this was changed, and we see that 2015 to 2033, the ENR construction cost index increased 33%. New water use permit quantity is 80 million gallons a day. If you take that $22,939 per million gallons a day that exists now, multiply that by, increase that by 33%, you come up with $30,537 per million gallon a day of allocated capacity. So if you multiply that times 80 million gallons a day, you come up with $2.4 million for the DeSoto payment. If we extend that out to 2028, which we're looking at the new capacity actually coming online in 2028, if we extend that out by the average of the ENR increase, we come up with about $2.86 million for the DeSoto payment. New payment would be effective fiscal 2028, and it would escalate annually by the ENR factor after that. This is a proposed methodology. This isn't something that's locked in stone, something that's tossed out there for discussion, and that's what we would suggest that we start. The effect of that, you see how the existing DeSoto payment, $796,000 through 2027, and the effect of that would be to increase each customer's allocated, or each customer's contribution to that DeSoto payment in 2028 as shown, 2029, 2030, 2031, of course, to be determined based on what the ENR factors are out there.
Excuse me, Mike?
Yes.
Quick question. On the proposed exhibit for the DeSoto payment in my book, obviously you have the updated one here today. That includes the index, because my exhibit shows the 2028 payment for Charlotte County as going from $369 to $874, and then the Sarasota payment going from $345 to $1,742,000. I'm getting something new here. Here it is.
Yeah, I think the book
Okay,
did get
yeah.
updated.
Okay, I've got it.
Yep. Those were the old numbers that
Yeah.
included Charlotte with
Thank you.
0 and Sarasota County with the bulk of it. So, yeah. So, any questions on the exhibits that need to be amended that go with the master water supply contract?
Well, I would just have a comment on the DeSoto payment. As a matter of public record, at our board meeting, we talked about what is readdressing. And I know you've taken what you feel historically is the trend and how things need to work, and I think the addition of an index now is in the mix going forward. I think part of the discussion with my board, and I had a discussion with you, Mr. Coates, is this something that our administration teams can get together and talk to you about?
That is exactly the way we propose to do it. is try to get the administrators together, to talk this through and see if we can work something out.
Okay, so I know I've already spoken to my administrator who's in the room here today about, working with you, and I would just ask my colleagues here on the commission maybe to direct your administrator to work with Mike Coates to navigate through this DeSoto payment.
I agree.
Commissioner Moran?
I think it's a great idea. First, I'd like to completely blame this on attorneys. I noticed that Doug left the room, so.
He wanted a front row seat for this.
State your name.
I appreciate all the work you guys did. That's awesome. No, I think that's a great idea because, we're all partners in this, you guys. I'm not interested in squeezing any partner, and I'm not interested in getting squeezed either. So, I think our administration, they deal with all sorts of other stuff in our relationships with each other, and this might be part of one bigger conversation. So, yeah, I'm all in on it for sure.
Well, I agree with those statements, except for the squeezing part. I don't mind squeezing, I just don't want it to hurt you.
We can appreciate that, too.
Okay.
All right. Doug is going to talk to you about some additional revisions to the master water supply contract.
I also mentioned, since Nancy's here, we will need Northport as well at administrative meetings because it's all 5 customers signed the master water supply contract. All 5 governments, as you heard Mike say, will need to approve the amendments, which includes these exhibits.
Hopefully she'll bring that message back to her board.
Appreciate it. All right, so on the cleanup side of it, we were doing a updated contract, which was done in 2005, almost 20 years ago. There's many aspects, you've heard me talk about this before at the workshop, I won't belabor it. We've got many aspects to update that contract to just clarify them. We focused on and worked with your councils and with the staff from 2022 through 2023 on this. I had it prepared and ready to go in January, and then of 2023, and then the idea was, well, we need to amend the exhibits for the new water supply. So instead of trying to get this amended or updated contract approved by all 5 boards, then come back immediately and ask to amend the exhibits with another meeting and an amendment, we decided to try to wait and do them all together. So we've got the option of going through and then just have the process up there, putting in basically a refined or updated contract. It's like Commissioner Moran, it's what us attorneys do, right? We try to fix the stuff that we didn't get quite right in the last contract by virtue of making sure that things that we referred to in 2005 that have either been built already or no longer exist. Things like there was a Charlotte payment which has been paid off, and so that needs to be taken out of the contract. A number of other items like that. So when we go forward, we want to go forward with these new exhibits that are basically implementing the 18 MGD new facility being built. So those are exhibit A, B, C, and F. And then also the updated contract. So really, if there's any questions, to go to that. We're not asking for any action items on this. We want to take a step back, have the administrators get together in a meeting, see if we can work through some of the exhibits in Exhibit A. Then we'll bring this back to the next board meeting when we have those things worked out, to then have you send the contract out in the exhibits to all 5 governments. Say, you stamp your approval, this is what we want to send out to the governments. Then that goes out to each of our member governments for them to consider and then hopefully approve and send back to us for signature at our later meeting, whether that'll be the June or August meeting or even October meeting, we don't know yet. Hopefully as soon as we can get it done, we'll be able to be back here with you and saying this is what everybody wants to do. So that's all I have. I answer any questions you would have regarding the update. Again, I'll talk to the staff about it. I haven't heard any, but I'll touch base with your attorneys again just to make sure, because it was over a year ago. So.
Any other comments? Commissioner Moran?
Yeah, just 1 second on this, Doug, and I'm teasing. I think the world of you do great work. This isn't easy. It's super complex to try and figure that out. But you do not need action on B, C, and F, anything at all. You just okay, great. So we're going to push A aside for now for staff to discuss, but they're going to discuss it all and then come back.
Yep, I'm going to bring it back. Right.
Okay. Sorry to slow it down.
Yes, sir.
All right.
Thank you.
Thank you, sir. All right. So we will now move on to the tentative budget for fiscal year 2025. Mike Coates.
Chair, board members, Mike Coates, executive staff. Master water supply contract, which we just talked about, requires that we develop and approve a tentative budget by May 15th of each year. And so each year we bring you the tentative budget at our April board meeting. Obviously, we've got a fast-paced growth in the region, and we are continuing our efforts to extend the regional transmission mains and develop new water supplies to meet those needs. In 2024, our project spending comprised about 65% of the budget. In 2025, project expenditures make up 80% of the budget. So obviously, our budget today is dominated by the capital improvement plan. The proposed 2025 budget allows us to meet today's water supply needs and moves us forward in meeting your future needs. The development of our annual budget is guided by a number of documents, including the 2005 interlocal agreement creating the authority, the amended master water supply contract, rate-setting methodologies established in Resolution 2005-08. We also have covenants in utility bond documents, require debt service schedules, debt service coverage obligations. The board has adopted budget policies for maintenance of reserves and contributions and assessments. Capital improvements that you heard Mike Knowles talk about are also considered, and the strategic plan that we have all factor into the budget. In addition to developing a budget that's consistent with all of those documents, other obligations and initiatives also guide the development. That includes, of course, making sure we have available capacity at 34.7 million gallons a day that we have contracted from you. Delivery of an estimated 32 million gallons a day in 2025. We make every effort to run a cost-effective and efficient operation. Part of that includes making sure that we keep facilities in excellent running condition. So we're expecting to spend about $4.5 million this coming year in renewal and replacement. Obviously, one of the core values in our strategic plan is financial stability, and the tentative budget supports that. That is very critical as we move into permanent financing for these projects, going to the bond market for the surface water system expansion project, Phase 3C and the Phase 2B pipelines. It's important that people think highly of us up there in New York City.
Chair. Yeah. Commissioner Beard?
Yes.
What's our current bond rating right now?
It's, what is it, double A?
Double A plus.
Okay.
Double A plus.
Thank you.
The budget timeline is shown here. We discussed the budget process at the February 7th meeting, March 6th professional staff meeting. We went through the 2025 tentative budget with customers, professional staffs. Today we're presenting the tentative budget for your consideration. The final budget will be presented for your consideration on August 7th at the budget hearing. All of these documents are included and online at our website. The authority is set up as an enterprise fund. All of our operating funds come from water sales, assessments to our 5 customers, grants, and borrowing. We don't levy any taxes to support authority activities. The enterprise fund is split into the 2 functional groups you see here, administration and facilities. Administration covers the Lakewood Ranch office costs, that's executive, admin, HR salaries, those office expenses. The facilities group includes everything else, as water production, engineering, construction, and water resources. If you look at a breakout of proposed administrative and facilities costs for 2025 compared to 2024, it shows that the administrative office charge makes up less than 1% of the total budget. The table shows that the proposed budget for 2025 is about $114 million higher than in 2024. Most of that increase is due to capital projects like the surface water supply system expansion and the 2 pipeline projects. Before we get into the actual budget numbers, I want to walk through the components of the authority's water rate so that everybody's kind of on the same footing on just how we charge for our supply. So the master water supply contract allocates average day capacity for the Peace River facility shown here, 34.7 million gallons a day. You can see how that's allocated among the customers. I talked about that a little bit earlier. The majority, of course, Charlotte and Sarasota County. The allocation percentages here determine each customer's share in the authority's fixed operating and maintenance costs, and they are billed as part of the base rate costs for water. So the authority's water rate is made up of 2 components. The base rate charge is assessed to cover both fixed operating costs, and these include staffing, repairs, maintenance, renewal and replacement costs, and there's a debt service cost as well. So base rate cost is fixed operating and debt service. The fixed operating cost charges are assessed to each customer based on their percentage share of capacity in that pie chart I showed just a minute ago. For example, Charlotte County's got 16.1 million gallons a day allocated of the 34.7 million gallons a day total allocation on the Peace River facility. 16.1 million gallons a day is 46% of the total allocated Peace River capacity. So Charlotte County pays 46% of the fixed operating costs. When we allocate new capacity, as Richard Anderson was talking about just a few minutes ago, all of those percentages are going to change. They're all going to shuffle around. Debt service costs are assessed based on each customer's participation in authority debt. And each customer has participated differently in authority debt through the years. For example, take Charlotte County again. Although Charlotte County has 46% of the Peace River capacity allocation, they only service 27% of our debt at the authority's debt, in large part because they were the first in on the original project, the project that we bought in 1991, and those bonds have been paid off, so they have less debt that they're carrying because of that. The base rate charge is levied whether a customer takes water or not. So you get a levy, you get a charge each month for your percentage of the base rate all the way through the year, whether you take your 16.1 or in Sarasota County's case 15.06 million gallons a day or not. The water use cost, or water use charge, reflects the cost of power and chemicals needed to produce and deliver the water. And the water use charge is levied only on what we deliver to our customers. So let's look at the 2025 budget relative to 2024 and talk about the revenue side of the budget. Water sales in fiscal 2025 are projected to be up about $1.4 million from 2024. The CIP fund, you'll see, is up $92 million. That includes revenue to fund the CIP, including 2025 borrowing to support those 2 regional pipeline projects and the surface water expansion project. Grants from SWIFT money to the state are up $22 million from 2024. So in 2025, that includes $11 million from the state and $62.5 million from SWIFT money. The other category down here includes planning and assessment fees, member fees, and interest income at about $1.1 million. That's the same as last year. Reserve funds includes internal transfers from the R&R reserve account.
Hold on 1 minute, Mike.
Yep.
Thank you, Mr. Chair. My question is what is our current debt ratio right now? Are we around like 0.2? Or where are we currently at?
Compared to, are you talking about debt per capita?
Yeah.
That we don't calculate because we would have to figure out what portions of each of our member counties or the city of Northport get our water to be able to determine the per capita ratio.
Okay.
Yeah, so even in our annual comprehensive financial report, we don't supply that information because we can't, really.
Right. All right.
Great. Continuing on, as we look at the carry forward, it's just that it includes debt service coverage funds collected in 2024 that will be returned to customers, and an estimated $2 million in unspent funds from 2024 brought forward to 2025. This graph shows the base rate change proposed for 2025 and the base rate changes for budgets for the past 4 years. Remember, the base rate charge covers debt service plus the fixed operating costs of the facilities. Between 2021 and 2024, the base rate charge increased about 7% annually. The base rate proposed increase for 2025 is about 2.8% above 2024. And I'll discuss the reasons for that as we get a little bit further in. The base rate charges for 2024 and the tentative base rate charges for 2025 to individual customers are shown here. As you can see, Charlotte County and Sarasota County splitting the majority of these. The total base rate is up, like I said, about a little less than 3%. You'll note, you'll note on here that Manatee County's base rate charge is zeroed out in 2025. Manatee doesn't pay any portion of the fixed operating costs for the facility because they don't have any capacity in the facility. However, they do participate in the debt service associated with our system-wide benefit projects, at least some of the system-wide benefit projects. The system-wide benefit projects that they participated in up until through 2024 have essentially all been paid off, and so they don't have any debt service associated with system-wide benefit projects projected in 2025. So they go down to zero. The water use charge is proposed to go from $1.09 per 1,000 gallons to $1.13 per 1,000 gallons, so 4-cent increase, a little less than 4% on that. And this chart just shows where the water use charge has been. We see that 2021, 2022 were relatively stable water use charges. In 2023, we saw really significant increases in our power and chemical costs. And so the use rate charges, because they are dependent entirely on those power, chemicals, and actually a little sludge disposal, had to go up fairly significantly. Of course, this past 2024 to 2025, we're only looking at about a 4% or a 4-cent increase. We've seen those chemical prices stabilize pretty substantially, and power costs aren't going up quite as fast as they were in the past. We have Stantec run our rate model, and this is just an output from the rate model. And it shows the proposed for 2025 and a projected increase 2026 and 2027 based on about a 3% increase, 3 or 4% increase in power and chemical costs as we go forward. Additionally, we have some relatively small assessments on the revenue side. Those include member fees and management and planning assessments. Member fees support the administrative cost center for the authority. That's the Lakewood Ranch office. These have increased about $41,000 since 2024. Member fees are collected based on board policy allocation, which is shown at the bottom here. Half of the amount is divided equally among each of the 4 members, and the other half of the amount is based pro rata on population for each of the members. Planning assessment is used to help us fund projects like we're updating our master water supply plan, working with Polk Regional Cooperative, all those sort of things. We levelized that planning assessment a couple of years back. It's the same, $475,000 is the assessment. What changes a little bit is the population distribution, and so not a whole lot of change in the costs for each of our customers, and this is paid by each of our customers, not just each of our members, so Northport's included in this. And it's based pro rata on population. On the expenditure side, similar to the revenue side, you see here, we see operation and maintenance cost of running our facilities, personnel, repairs, maintenance, up about $2 million, that's about 7%. Most of that increase is from personnel and associated benefits, utilities, machinery and equipment, contract services. Debt service is the same as last year. Projects includes the CIP projects, R&R projects, management planning process projects, is up $113 million from last year's budget. County payments about the same, disbursements about the same, and other, which includes contributions to renewal and replacement reserves, and various internal transfers decreased by about $1 million from last year.
Mr. Coates?
Yeah.
Yeah, I have a question on the personnel costs. We had a discussion at our pre-agenda on this, and it's a little bit different than the way we do it at the county, but apparently your personnel costs are tied to an index out of Tampa. It's a 7% increase every year to the personnel costs. I mean, how does that work? It's a little unusual.
Well, the personnel costs aren't actually tied to that index. What's tied to that index is the individual categories of employees that we have. So we have different classifications of employees. So we tie that to the index so that we don't get behind. Now what we did do this year is we looked at what that was. What was that?
It's the Bureau of Labor Statistics CPI for the Tampa area.
Right. So we use that for the staff pay increases, the raises that we would propose for 2025. And it turned out to be about 7%. That was through the end of fiscal year 2023, so through September. Since then, that actually has gone down a little bit if you look marching through time. So, we could look at that again if we need to.
Yeah, because I know at the county we have pay for performance, and it's at the high end you have to essentially be a rock star. It's like 5%. The average is like 4% when you look at the personnel costs as a total with the annual increases. We don't have it tied necessarily to this index. So do you apply the index to your ranges?
That's what it's
Okay.
pay ranges.
So your ranges go up.
The range of margin.
Yes. Yeah, so the ranges go up 7% annually based on the index, assuming the index is 7%, which
right.
Okay, those are the ranges.
Yeah.
But then each individual personnel also can qualify for up to 7% based on merit and a COLA.
Based on what we proposed in this year's budget, yes.
Okay.
And the budget.
So we're getting a 7% increase in the range automatic, and then each individual can qualify for they get a 3% COLA, that's automatic, and then the other 4% is through a merit-based system. Where you score them.
Right.
Okay. Yeah, I didn't know if other utilities use the same type of methodology, if this is unique to the authority. I've only been in government since 2016. I only know what we do, and we do a peer review when we look at other governments of same population, and we also do a regional snapshot, and we go outside the region just to get a flavor for what's going on. So I just wasn't sure, because this was so unusual to me, you know, if this is unique to the authority.
I'm not sure that it's unique to the authority. When we looked at the 7% increase for staff for pay increases for 2025, nobody else had come out with anything. I mean, customer governments, as far as we know, hadn't said, hey, we're going to look at 4% or 3% or 5%. So, we can look at what everybody else is doing with that.
Because I know for our Charlotte County utility employees, they fall under Charlotte County government. They're in the same type of thing that I just described that we do, that 5% and less pay for performance. And, we look at ranges, but it's not an automatic 7% annual increase either.
No, we don't give everybody an automatic 7%.
No, but the ranges go up automatically.
Yeah. Well, yes, the ranges do.
Yeah, so they keep going. So when you hire in somebody new, the minimum's changing annually. So the starting pay goes up, and then it's compounded by their annual. I'm not saying people don't deserve it. Don't get me wrong. I'm just trying to understand this because it's so unusual to how we've done things, at the local level in Charlotte County. I don't know how you folks do it in your counties, but maybe there's some additional comment, Commissioner Moran.
Yeah, it caught my attention too, and I guess you gotta hope in this conversation you assume the baseline is people are being appropriately compensated as you speak, right? So the question is how do you do increases? What adds a layer of complexity here is you have 4 different folks sitting on this dais that how do you make a vote for something you wouldn't do for your own staff versus making something you would do for a third party that you control? I'm not totally in favor of this, but it may be something for discussion, is tying it to some other entity, maybe even one of us. And our internal way of doing things is that if there's going to be any type of standardization going forward, it's tied to something else. In this case, you're, I guess, using an index or somebody out of Tampa. Maybe it's Southwest Florida Water Management District. Maybe it's one of our HR departments. Something that you can point to that would have a true rational nexus of why you're doing it, other than spitballing. But and I'm not suggesting you're spitballing. Like it's difficult. I wouldn't do that for my own staff. Thank you, Chair.
Commissioner Beard.
Chair. Thank you, Mr. Chair. What we're doing in Manatee County is we're outsourcing the HR. We're just coming to that realization that it's, a whole lot more fluid. Especially if on our side we're dealing with 2,000 employees, just like Sarasota County. But we just found it more. We're actually dipping into that right now instead of trying to run it internally because it just wasn't working for us at the time. So something to look at maybe.
Commissioner.
On the index, Mr. Mike, how did you guys come to picking an index like for Tampa or that measure?
For indexing the pay ranges, we got that recommendation from Evergreen, who did our last pay study, and the board approved doing that in last August. So they approved using an index and indexing each year and marching that pay up. Like I said, it doesn't apply specifically to raises each year, which we just pulled off of the same, pretty much off the same play sheet. It would be great if we could identify an individual customer that we could use for that. We've got 5 customers, 4 members. Everybody does it a little bit differently. So we're all ears on how to deal with it.
Yeah, I know the board approved it. This isn't on, your issue. It was board approved. It came before the board, and it was okay. But I wasn't on the board at the time, so when I started looking at this, I was asking questions because I believe the authority is also using Charlotte County health care plan, which you're paying for. Yeah, I think you're part of FRS.
Yes.
For your employees. So I look at my utility employees, and it's like if I'm working there, they're getting the same benefit package, but you can come here and get a bigger pay increase than what we give. It's kind of like I'm competing with myself. that's just the dynamics that are out there, right? We're all trying to go after these specialty people who work in this industry. It's a unique industry, right? So you can't just pluck these people off the street. A lot of them have technical background and knowledge to work in this field. But yeah, so it did come before the authority back in August, Mr. Coates said.
Was that a motion to match whatever Charlotte County does?
No, I mean, we've already, it's already was approved in August. I'm not sure what cycle was approved. Did it just go through the end of the year?
No, what was approved in August was that we would go up by, the pay ranges would go up by the CPI each year. The board, so they didn't approve us going up by the CPI every year for individual pay increases.
How often do you do the Evergreen study? Is that an annual review?
No, it's usually about every 5 years.
Okay, thank you.
All right. So as we get into the individual expense categories, we see O&M in the budget is up, is about $29 million. That's up 7% from 2024. Like I said, a lot of that increase is associated with staff costs, power and chemicals, those sort of things. Property insurance costs are unchanged from last year based on what was just approved. Repairs and maintenance increased less than inflation, about 2% in 2025. Small increases in machinery and equipment, and about $400,000 increase, 18% in contract services. Most of that's associated with wetland and watershed programs that we expect to increase. Lab testing for all of the regulations that seem to be coming down from the EPA. We're going to have to spend more money to test, and reservoir permit monitoring systems that we expect to have to change. Other rate-related expenditures, mostly these are internal transfers, contingency funds, and debt service coverage. This is a decrease of about $1.1 million from 2024. And that's primarily less system-wide benefit project costs that are required from our customers. The big costs are shown here. Projected $200 million expenditure in the 2025 CIP projects. Those include the surface water system expansion project, phase 2B and 3C pipelines. In 2025, about $73.5 million in CIP funding is expected to come from SWIFT-led of the state, and about $126 million will come from the authority's line of credit and new bond and loan funds. Finally, the budget disbursements. This is $1.5 million in debt service coverage funds that is collected from each customer. It's collected from the customers every fall and is returned to the customers every fall. So it's just kind of a revolving amount of money that we have to keep on hand to maintain our debt service coverage. That represents 15% of the annual debt service that the authority has through the year. As we roll up all those costs, compare with prior years, the O&M costs increasing slightly through time. Non-O&M costs, which include debt service coverage and transfers, those have increased and decreased based on just what we're doing. 2022, we refunded some bonds and we provided more of that money back to the customers, so that increased a little bit. The CIP is the big item on here. It started increasing very significantly in 2024. 2025, as Mr. Knowles indicated, we do expect that to peak. 2026 and 2027 will be big years though too. So you'll see see the CIP dominating the budget for those years. And any other questions or discussion? I do have a motion.
Commissioner Brand?
Could you go back one slide on that, Mike? Again, I'm term limiting out, so this doesn't matter, but for those of you that aren't, when you get those emails, I don't even need to look at your inbox. I know you get emails saying there's no investment in infrastructure. Like if that graph doesn't tell you volumes, I don't know what does, but that's one for the website. Go back a minute with me, Mike. And so what was that evergreen? I'm off center in that. What was approved and what wasn't approved with related to the evergreen at the board level?
The board approved the evergreen recommendations on new pay ranges and descriptions, job descriptions, those sort of things. They also approved us going forward with an indexing every year of our pay ranges that would be tied to the CPI.
Okay. And I'll take some ownership in this because what I promise myself every time I get involved in personnel and HR stuff is getting to the foundation. Are you having problems attracting and retaining employees?
We do have problems attracting and retaining employees, especially water treatment plant operators, electricians, engineers, yes.
With how many open positions, roughly?
We have 5 open positions right now. We have 57 approved positions. 52 of those are filled, and we have 5 open positions now.
And based on salary, location, just overall, the ones you mentioned, just everybody's struggling with, kind of, just what's the overall sense of it?
I think that's it, and especially, it's salary and its location. I mean, a lot of those project, a lot of those staff positions are going to be out of Peaceful facility. That's not really central to Sarasota County or Manatee County or even Western Charlotte County, where a lot of those people might live. So they look at it as maybe a little too far out. So we deal with all of that.
Well, but like you mentioned, that it's put us in an awkward position because we're struggling for those positions as well up here. But as far as sitting on this board with this hat and trying to attract and retain talented people, would it make more sense as a policy discussion if we're going to push in more salaries to push them in on those open positions? Because maybe that's exactly true, is that, yeah, I'll do it, but I'll do it for X amount of dollars more an hour. Would it make more sense as a policy decision for this board to put the money into those positions specifically?
I think that's what we look at really on an annual basis. We look at positions that we aren't able to attract, and fill, and we might adjust that by bring people in above the median, above the midline and those things, or bring them in certainly above the lower end of those. So we try and be competitive, and obviously we compete with you, but the bigger competition for a lot of the professional work, engineers and all, of course, is the private sector, and we really can't compete well with them for salaries. Where we compete with them is more a lifestyle. You don't have to work 80 hours a week.
Yeah, Commissioner Tiseo, I heard you loud and clear. That's quite a dance that we're doing. Is you pay more than what we're paying for our employees, so like, I'll just work over there. There needs to be some type of thought to that, I would think, but right there, I can't offer anything, which is troubling to me. But you got to make sure, literally, if we pay people more here than we're paying in our own hometown, we're obviously in conflict with ourselves. That's just bizarre to me.
Mr. Chair, I tend to agree, and being us as a smaller county compared to the outer coastlines, you're probably able to attract a little bit more qualified folks in your general area compared to DeSoto County. Maybe not.
I don't know about that.
But we struggle as a county trying to fill positions daily too. And when you look at the per capita of people living in your community and what's available to them to travel to DeSoto County and be here, I know our director Greg Harris struggles with it, and a lot of our other directors challenged with it as well. So that's a hard one to really compete against yourself.
I mean, I guess money talks, because we're losing a whole bunch of sheriff's offices to Sarasota County because they raised. So I know Sarasota, because I know every time you guys raise it, we got to raise it too. We can play this game all day long. You know what I mean?
Sheriff,
but that's, I mean, people right now, man, they're hurting. So I mean, at the end of the day, they're going where the most money's at. So I think we need to have a regional conversation about that.
Sheriff, that's a great example, because this is so nuanced. It's like when you actually talk and go deeper into that conversation, it can depend on the different law enforcement agencies throughout the state of what kind of car you're driving. You got SUVs, so I'm gonna go work for them because you're sitting in a car all day. And that's how nuanced this can get. So that's why hopefully you feel that frustration, Mike, is just lobbing out, 7%. Are you really doing what you're trying to accomplish, which is attract and retain people? That's my only point for bringing it up. And I'll take ownership on any past discussions on that. I just want to make sure you're getting what you need.
I appreciate that. And we have an internal policy, not a board policy, not to steal employees from our customer governments. So we don't actively recruit your water treatment plant operators or your engineers or your maintenance people. Now that doesn't mean that if they leave your agency, we may not hoover them up.
So, I guess my issue is this, so the Evergreen study looks at where you need to be in your ranges to attract the people here. So it's being addressed through the study. So you're not paying below market wage for the type of job you're looking for. I just look at the 7%. My thing is, I'm not even offering that to my own employees. That's my hang-up. And we have technical people too, and we go through the same studies and we look at it, and we don't have a 7% annual increase that you can get. You can get up to 5. So that's my hang-up is, equitable among the various member counties, and we sit on this authority. Why is the water authority employees getting 2% more than my county? I don't think any of the other counties do 7%.
We're the same 5%.
Yeah, 5%. So we're all at 5%. So that's the thing. That's just my hang-up on this. That's all. Should it be? Right now it's a 3% COLA, 4% merit. Should it be a 3% COLA and a 2% merit to get you to 5? Where they still get an automatic 3%, and then if you're doing a great job, you score out, you get another 2%, and get up to 5. Is that a discussion for another day? I mean, this is just a tentative budget. This is not the final. So, perhaps on the final budget, staff can bring back that option and see what it looks like in the budget, what the budget impact is.
Well, that's sorry.
Yeah, that was a given.
So, Mike, is that if that's a directive consensus motion from this board, 5%, you're going to go back and build it and bring it back to us? Is that what's the ask here?
That's exactly what we're at.
Got it.
Okay.
Yeah, I mean, they can bring back. They can bring back both options as they're currently doing it with the 7%, and then option B, 5%, whether it's a 3% COLA and 2% merit, however the mix is on that, and then we can decide then and just look at what the fiscal impact is going to be on the budget.
I could easily support that as a consensus, a motion, as long as staff's clear.
Well, I don't think he's done on the presentation yet.
Well, I'm pretty much done on the presentation. I just want to make sure that this is the tentative budget, and we would hope that you could approve the tentative budget, and we will bring that change back. Okay?
Yeah, I don't object to that.
Okay.
Because we can change it at the final budget here.
Sure.
Yeah. So I would just, if you're done with your presentation.
I am, other than the staff recommendation.
Okay, so we have a recommendation and a motion here to approve the tentative budget for fiscal year 2025 in the amount of $255,896,482. With, and I believe I'll summarize, with the option at final budget hearing to bring back personnel costs using a 5% total pay raise, 3% COLA, 2% merit base. Get that right? So I'll need somebody to move that.
I'll move that as presented by the chair.
Okay, we have a motion by Commissioner Moran, second by Commissioner Beard. Any further discussion? Any questions to the motion? Hearing none, passes unanimously.
Mr. Chair, there is one other item that's associated with the county budget, and that's the adoption of the rates, fees, and schedules.
Okay.
And that has a motion associated with it as well.
So you're looking for a motion to approve the rates, fees, and schedules?
Right, for the tentative budget, yes.
I need a motion for
You
that.
done, Mike, with the presentation? Chair, we're agenda item number 2 under the tentative budget for FY 2025. I believe number 2, it's the motion to approve resolution 2024-06, resolution setting forth preliminary schedules of rates, fees, and charges for FY 2025.
Okay, that's a motion.
Second.
Okay, we have a motion and a second by Commissioner Gross. Any further discussion? Any objections to the motion? Hearing none, passes unanimously.
Thank you.
We are now moving on to the General Counsel's report.
Yep, I'll keep it short. Thanks to the brilliant Mike Knowles, the number 1 has been slashed off of my agenda, so you can shorten it that way. He found a resolution that had already been passed by this board regarding phase 2B that we can utilize for our permit our request for easement from DEP on some property. So that's taken care of. The second is, just wanted to inform the board that we brought up and sent a policy letter on the FRS policy on the executive director's deferred compensation payment, and received a response back from FRS basically saying, no, we don't think that's what your policy actually does, and that it can't be included as part of the salary for the calculation of retirement benefit. So we filed a petition, because in the state of Florida, the agency takes a final agency action, you can file a petition with the Division of Administrative Hearings. So we filed a petition, and we haven't heard anything back yet from FRS. Today is the deadline for them to forward it over to the Division of Administrative Hearings. We're hoping that we will get some type of conversation and dialogue with them on modifying their position, without having to go any kind of hearing, but I'll keep you updated on it. I'd like to be ready.
Any member comments, questions? Okay, thank you, sir. Okay, we'll move on to the Executive Director's report. Mike Coates.
I have nothing to report.
Nothing to report. Routine status reports.
Those are in the board packet.
Okay.
If you have
Any questions? Any questions on the routine status reports? Okay. Board member comments. We'll start from my left, Mr. Beard.
I have none at this time, Chair.
Okay, Mr. Rose.
I have none as well.
No, sir. Okay. I have no comments. We usually at our board meetings have staff comments at the end too. Is there any more comments from you? Anything? Mr. Coates? Nothing? Okay. We'll open it up to public comments. Individuals who would like to speak, you'll have 3 minutes. Was there anybody who did not have an opportunity to speak earlier? Okay. Not seeing anybody rise. Announcements. Our next board meeting is June 5th, 2024, 9:30 a.m. at the Manatee County Administration Center. We have future authority board meetings on August 7th, in Sarasota County, October 2nd in Charlotte County, December 4th in DeSoto County. If there are no further comments or questions, this meeting is adjourned.
Yeah.